Yeah, I turned off the sound. I was making some coffee. So, what I was doing actually here, okay, like when I was making the coffee, when what I was doing is, I was seeing that fair value. Remember, my friend came yesterday. He said he usually puts it right below that, what it calls, right below that 930 fair value. If it's five handle, I believe it's five handle, even more than that, it's nearly eight handle. So it's 85 to 93, nearly eight handle, 7.5 handle to be exact. Oh no, 8.5 handle to be exact. But I remember what I usually say is if I'm using a fair value, I used to like I look for the obvious level to put the stop loss and then I target 1 to 2. Now that would take the price here if I put the stop loss here. So I had a positioning tool sitting like this way. When market closed below this fair value, which I'm still expecting, there is a reason behind that, which is I have equal sell side sitting right at that level where I have the settlement price, the midpoint of that, the 50% of that, and this is the high of the hourly fair value gap. Okay, good evening everyone. Yeah. I muted it actually, that's why it was not working, and by my voice you can already say how it feels after that huge stream yesterday. And by the way, yesterday what did I said about the consolidation? If you see it's going higher, that is not your retracement. That is literally your reversal. You can see that it's the same thing. Market is again in consolidation today at 2 p.m. Wait a second. I want to utilize this fair value, okay? Because I believe market is going for this sell side liquidity because that is the settlement price midpoint as well. Especially I'm thinking about this one, so I'm just utilizing that 930 fair value. Yes, I should take some partial below this low because of that new day opening gap, but exact equal, come on, doesn't make sense to close over there. uh yeah, steady. I'm good. Hey Shiba, how are you, bro? Good to see you. And by the way, Shiba, I think Shiba AFX or who, I cannot remember exactly. Michelle Shiva and someone else. I have gave you guys some moderation or moderator power, so you guys may be able to create some own channels for you guys. For example, like a voice channel, then whatever. Like you guys are now able to use that moderation or moderator power to make your own space in the Discord with some other people if you guys want. So I will slowly give more, like make more people moderator and administrator. Like my nephew who joined recently, he has very good experience about Discord. Like he was running big events on esports like FPS games and stuff. So he has very good knowledge regarding that. uh, I gave him the administrative power so he can do anything he wants to do on my Discord. I gave him because he can actually add some mods, create some, like organize the whole thing in a better manner so that people don't have everything happening at the same place. That's that part. And about today, again, let me actually let the market do whatever it's doing. I'm more focused on my account that I'm usually showing you guys over and over again. So this is that account. It's one trade, okay? If you see at the, or let me actually, that's the exit price, okay? It's the same exit price. It is just one trade, just exited different places. And about the PNL, it's okay. That's the one trade performance here, okay? So until today, I have completed 10 days. So I'm already eligible to request another withdrawal. So I'm going to request another withdrawal on this specific account. Tomorrow, I'll not be working. Sorry, I'll not be trading on this specific account. Yeah, I mean, even though when this, after this day, I was requesting withdrawal, I already took trade on this account. but I'm not going to take trades on this account when I'm requesting for a withdrawal. Or I can do another thing, which is I can withdraw little less than exact 50% of the balance, which is nearly $4,700 right now, this account balance. But so minus 2,100 from there, yeah, so approximately like $4,700. So I can withdraw little less than what I'm planning to withdraw. So that's that case. So this is that 50K funded account. I have invested only $4.50 for this account. Okay, like when they gave me the offer, I was not using it. It was sitting on my like it was just charging me month after month, but I was not using it. So then when the top step X got better, I thought of giving it a chance and let's see how it works. So I just completed two of those $4.50 account, um, like two 50K accounts, and I have completed it and took it to the funded level. That's those accounts, but my main accounts are with still trade of it. But this one I'm solely leaving for these small accumulations. Okay, one day 947, one day 945, and the first day of the account when I was not actually thinking about making it a small profit and accumulating every day, that sort of thing. This is that uh, first day where I made $1,800. But other than these 3 days, yeah, there will be time when you will make even more. Like for example, on this day I could made more than $2,000 on this account, but I choose my bigger account for bigger risk or bigger profits, and this one I solely left it for wherever the obvious level is. I will take the profit there, and this is that. So 10 days in a row I have done, and I have already got the withdrawal I shared. This is again ready to make another withdrawal. So the total amount I spent on this specific account was 149 US dollars for the express funded account activation fee or whatever they call it, and $4.50 for the account itself. So altogether it was 100, let's say $60. Okay, and I have already withdrawn $2,100, and this time it will be, if I withdraw half of it, so it will be nearly 2,300 something. So yeah, I mean it has already delivered more than what I invested on this account, like far more, 10 times, 20 times more than that. Okay, and I have locked the account, all of my 50K funded accounts, and let me bring the other account and come back. Which, just a second guys, I'm not sure which one I actually should trade today on the live. The one I had 20, 270, 30, 90. Yep, so this is the one I'm willing to trade today. Okay, let me read some comment. You traded London today? I didn't trade London today. I traded literally just after that, for like it's still in London, but yeah, what I was trying to say is I didn't trade the exact London. Like I usually sit before 3 and maybe look around until 5 or something, 5 or 6, because there is a 1 hour what it calls daylight saving also going in London, so that's that part. Now it's leaving this sell side using the same like that low is still not violated. So if anyone used it for buy long and used a proper stop loss, not just lower, okay, proper, then they are already in profit. And especially the one I always talk about, 1 to 2, I am still like leaning towards that sell side, but this is how your buy long should look like. You may do one more thing, which is, as you can see, that new day opening gap, that low is literally tapping that new day then reacting or rejecting. So you can maybe cover a little inside the new day, maybe a tick or two, so that it can revisit that specific area. That can be the highest level where you can put your stop loss, and this is your take profit. Now how big of it? It's 25 handle, so 500 $510 worth of a stop loss is what you are actually looking for. And I think buy, if you put it here, by now is it delivering? Not yet, but it will actually, it will deliver, because that's what the 1 to 2 is for. That's what the 1 to, like, whatever I target 1 to 2. Okay. And today I'll be very short. Okay, that's that 1 to 2 hit. Now whatever market wants to do, it can do. I mean, for the buy long trade, I don't know about the liquidity on the left. It's too many things over there. Okay, so these are the trend line liquidity. I believe it is going for that level, like that new week opening gap. I'm gonna remove this one, but remember there was one just below that new week, because this time if it's going higher, it is going for that, and it's literally what I said over here. After a down close or lower expansion right here, okay, market consolidated, then it went higher. This is not a retracement. From a consolidation, market will never retrace. So this is that part where market expanded higher, which is a reversal. After that expansion, again a little consolidation, market is expanding higher. Okay, if I, trust me, I didn't actually, I was not looking into this specific fair value. I was more focused on this one because I was thinking that market will do this, but after 9:30 or whatever, like after 9 it created this. I didn't realize that. If I realized it, I was not immediately looking for a sell short for that sell side. But this is your 15 minutes fair value. Okay, so 9:30 was literally rejecting from that fair value. I didn't saw that 15 minutes fair value, because I was looking forward to market take this liquidity, retrace back here. But same thing, okay, consolidation, expansion. Yes, it can create a week to grab the liquidity on the higher time frame. That was what I was expecting, like literally a week will come here, take these relative equal lows, and then continue higher. But unfortunately I didn't realize that it's already trading another 15 minutes bullish fair value. So reversal, these are your buy side until that new week opening gap, because I'm not seeing any reason right after taking the buy side it is falling. Okay, so these are that yesterday AM session buy side. Even it can continue higher because you have the Asia session high is still intact over there. Okay, I don't know, yesterday I was showing a lot of things and that has too many lines over there, but that's that last 15 minutes fair value, and this is yesterday's high. You can, if it can go through this new week opening gap, then it is going for this level. Especially I'm thinking about that buy side and that daily order block mean threshold. Remember, we have a CPI, okay, and the chart so far, whatever I have shared or short so far, this is how it looks on the weekly. Okay, unfortunately they were not supposed to be here because I had the, anyway, just look here. Okay, a bearish fair value, a bullish fair value, the one I marked with those blue lines. From bearish it's coming to bullish, from bullish it's rejecting back into the bearish. It's like in a range bound price action. This Thursday has the one of the biggest impact. Like this Thursday, please, okay, do not aim for any FOMO entries or anything. This Thursday the market will literally have one of the biggest 1 minute candle you will see. Like so far, even in NFP, it didn't created anything like that. One of the biggest 1 minute candle will be formed on this Thursday. So please do not try to enter into a trade around 8:30, or if you are using London session, make sure that London have a high probability that it will be consolidating. It will not maybe expanding that big or something. There is a chance. Okay. Or if Asia is consolidating tomorrow, okay, not tomorrow, I'm sorry, Thursday, be very careful with your higher time frame, because if you see the whole Asia kill zone or Asia trading zone is a consolidation, a clear visible consolidation, which I'm literally showing you like here, okay, current price or whatever you are seeing. This, what is this? You can literally see a sideways price action. Same thing, maybe this is your Asia kill zone, sideways price action. If you see that clear visible sideways price action, chances are the manipulation before the news will happen during the London session. If Asia doesn't visibly consolidate, then the London will consolidate. Using the news, first the manipulation will happen and then the distribution will happen. I'm actually talking too far ahead, right? Because it's only Tuesday. I have Wednesday, I have Thursday. So there is already like there is another 5 and 2, 7 sessions to go, which is from today. New York AM, New York PM, then 4 sessions over there. So that's 6 and 2, 8 sessions. I'm talking about something that gonna happen 8 sessions after. So think this way, that whenever you are looking on Thursday, especially if you are looking for any trade or anything, make sure you have enough time before the news, because right before the news market will slow down and there will be consolidation. As you will see literally sideways price action for maybe from 8 to 8:30 or maybe 7:30 to 8:30, 1 hour or something. You will have that specific, because it's a huge red folder section on that day. It's month to month core CPI, then CPI month to month, then CPI yearly report, then unemployment claims. It's 5 red folder news coming in a single minute. It's like 8:30 is in a single minute, 5 different news is coming, or 4, whatever. Like I'm just so this is going to be one of the biggest 1 minute candle so far in this month, or so far in this week you have seen. So please do not try to click on that specific moment or right before that specific moment. Let it do its job. If you have the direction, you will find your setup literally after 15 minutes, 20 minutes, let it go. Okay, at least that part you avoid. Then if you if you can find any setup, you take it. Or if you can even wait until the New York Open, that's even better, because news time, New York Open, the starting candle 9:30 will be even more volatile. So yeah, I hope you got the point. Like it's rejecting from bullish, it's rejecting from bearish. So far the weekly is literally inside of that range, the daily is looking like this, whatever you are seeing. But what is the thing that I said? Expansion, a little retracement turned into a small consolidation. After retracement it can do the consolidation, but it cannot do another retracement. From here it should not go another retracement, it should do the expansion or the reversal. That's that part. It gave you expansion. Like look at the bodies, okay, upper section here, like 4 days, the same range is your bodies, the same range is your bodies. Whatever you are seeing over here, it's because of that conflicting zone. But the thing is, the bearish one has that same fair value in every other time frame, weekly, daily, 4 hours, 1 hour, 15 minutes, whatever you can ask for, that fair value is available in every other time frame. However, here the bullish one, it's only the weekly. There is no other fair value gap here on daily, or even I think the 4 hour one, it's literally completely filled up. There was a very small one right here which was completely filled right there. So the way I'm seeing it is, it can lean towards the sell side more. Okay, it can lean towards the sell side more after the news maybe, and because of the liquidity it's leaving. So I hope that part is clear. Simple, guys. Market, okay, so it has taken all those highs, the yesterday consolidation, these highs, okay, the AM, and it has reached for that new week opening gap. Now, unfortunately, it didn't trade any fair value gaps here, and that huge fair value is already somewhere where the higher time frame point of interest is. So even if it goes higher, I cannot use this fair value, and if I have to use it, there is no wick over there. Otherwise I would say the 50%, below 50% of this fair value could have been my stop loss, but since there is no wick, I cannot do that either. So yeah, I mean, let it do its job. I'm gonna what it calls, I'm gonna make it very short today, because yesterday that was a disaster for me. Right when I went to the bed, like went to sleep, there was a plumber coming to the house, and he was literally knocking my door because he needs to use the garage for some reason, and I have to move my car out of the garage. What a bloody joke. So I didn't sleep at all. Okay. And then when I returned home, that's why I was not thinking much about trading. I took only one entry, got whatever profit it gave me. I just like took partial, then it came and like hit my trailing stop loss. So altogether that 485 or whatever you saw, like I cannot remember, but whatever the total profit is, that is what I always like. That's the one I'm focusing more on, a small profit. So once I'm over $200 in profit, I don't really need to look at the amount. I don't care about how big the PNL is or how small the PNL is. Minimum 200 is needed. I'm with that flow. Now let me see. I watching London session, looking for a silver bullet entry as per your video. You told me, but no entry today. Cesar, hello brother, how are you? And let me actually have more water, because my voice is already messed up. After such long time, I did that long of a stream or something and didn't have proper sleep. By the way, it didn't trade that low of the new week, so it should go back again above that high, if I'm not wrong. And let me see, can you explain the mechanism of expansion manipulation? So every market, okay, like whatever the market cycle is, if you are swing trader or a position trader, your higher time frame can be monthly, weekly, this sort of time frame, and your trading or execution time frame can be daily or even 4 hours time frame. But depending on what type of time, like I have explained everything in my market maker model, but I will try one more time. Depending on what type of trader you are, first you have to choose that. Like we all know what type of trader we are most likely a scalper. Okay, it's more of a scalping, entering into a trade, exiting within 3 5 10 minutes. It's not a short term trader. Short term is at least taking couple of hours to exit out of a trade or something. Not within 2 minutes it's hitting your stop loss, or within 5 minutes it's hitting your take profit, or sometimes even in 1 minute it hits your take profit. Not that way. So we are all, by the way, let me just mark this part and see like if it's actually respecting that midpoint or not. For example, like if I was looking for a trade, only thing I'm not liking about this fair value is there is no wick. But if I was looking for a trade, I would first of all use fair value. I would look for it from the 25%, and my stop loss would maybe cover 75%, like just below that midpoint, and target is nothing but this high only. Okay, remember this is 28 handle, guys, and that's also giving me more than 122. But because there is no wick on this candle, this stop loss, there is a probability that market will hit this stop loss. That's the reason I'm not taking, or I'm not looking for that entry. But let me put a small line and then explain you the market cycle, so that's the CE of the fair value gap. Okay, just leaving it this way. But just because of the reason there is no wick, I let this trade go. But it's obvious because this week it didn't trade the low of the new week opening gap, so I'm not looking for any reversal or any bearish momentum straight away until market can go above that high and trade at least that level. And I believe there are some relative equal highs inside the new week here. Okay, inside of that new week opening gap, relative equal highs sitting right there. Okay, even above that we have more, but just for that specific part. Anyway, so let's talk about the market cycle. By the way, this is already a 1 to 2 more than that and giving nearly 28 handle worth of profit. Okay, which is with one lot, that is $560 if you take it. And by the way, by now, since your entry is too far above, your stop loss should be at the break even or just a tick above that mean threshold. Sorry, not above, just a tick below that mean threshold. So this stop loss, now you are moving it maybe around this area. So your entry was from 25% or low, but you should not let the market come back to the fair value one more time before taking that high. And sorry about the target moved as well, but this is what your target looks like. Your entry was around this area, but if it comes here, that is where your exit out. Just a tick or two below the I don't know, like if it's a tick or if it's on to handle, but you are in break even or bit even in profit. So if it hits that level, you are out of the trade. So you are out of the trade with maybe a small profit. That's it. You should not be holding it until it can reach there. If you still believe in the process, you will get even better opportunity to enter from this consequent encouragement. So yeah, I mean, let's talk about the market cycle. So mostly the best scenario or the best environment to look for a trade is market will start with a consequent encouragement. I mean, I had this sort of respect because already it came at exact low of that order block level. So that's a bullshit approach to the market. It is respecting mean threshold, going for that buy side, but unfortunately it came to the exact order block level. Anyway, so the ideal scenario to look for a trade is the day your market starts with consolidation. For example, today the Asia was consolidating. When Asia is consolidating, from consolidation you can expect an expansion. From expansion you can expect either a retracement or a reversal. REV, okay, and RET. This can happen from the expansion. Another thing can happen is from both of these. Okay, you can expect another consolidation. So it's a bit complicated looking here, but let me explain a little. So ideal scenario, your market will start with consolidation. From consolidation, it will give you an expansion. From expansion, it can do multiple things, but one of them is either retracement or a reversal, or from expansion, it can do another consolidation. But what it will never do is, from the consolidation, it will never give you a retracement. This is a no. Okay, the red line is a no. Same thing from sorry, I put it on the other way. The retracement is up there. So from the consolidation, it will never give you a retracement. From consolidation, it can give you reversal, but doesn't But doesn't that mean that anything could happen? No, no, no. It's a sequence, it's a cycle. Why I'm saying this? Come again. Okay, like from consolidation, you can expect an expansion. So why, how come there is anything could happen? If once you see a consolidation, the only two thing you can see or you can expect is a expansion or a reversal. Only this you can expect from a consolidation. Why I'm saying how, like how anything can happen is bothering you, like you the way you are saying, maybe, yeah, so it from consolidation it may reverse or it may expand. But think this way, where is your entry when it's consolidating? Is there your entry? If not, then why you are not willing to see if it's a expansion or if it's a retracement, yeah, or if it's a reversal? Wait until you get that. When are you getting it? Remember when this market was literally around this area before I ended up with my stream, right around this area, I said I'm seeing equal bodies over here. After the expansion, if it can consolidate, but if it goes for deeper retracement, that is not a retracement, that is a reversal. Didn't it went all the way back above those initial consolidation high? Same thing here. From consolidation, what did market did over here? It was falling. Where the, look carefully, where is those things are happening? Okay, inside of a fair value gap. Same thing, where is this thing happening? Inside of a fair value. But when after trading fair value it was coming lower, let's say it didn't took this liquidity, it came very close to this area again. From here it is going for another fair value, which is you had a very small fair value. Remember what I said about this 15 minutes fair value, that I'm not worried about this fair value, it's too small to mark and market will not give this fair value a damn. Okay, like maybe like 1 minute. Okay, let me, I didn't draw it even properly, it's too small to draw. But there was that breakaway gap, it's going through that straight away, it's coming through that straight away again, it's going for that area. So that fair value was not my concern, because right above that I have the new week opening up. My concern is that part. Or if you look on the left, there was this fair value that market previously, what is it, one time fake. The next time market can come until the low of the fair value, or even the week can go past the fair value, but it should not go above with a body. If that is a fake for one time, it should not repeat the same thing. So that, what are you seeing right here, where from where it is doing all this rejection? This is more accurate or this is more accurate? At the same time, it came this close to your new week opening gap, it didn't tap it there. Are you expecting market is going lower now, or you are expecting or waiting for market to actually revisit that area? Now, about your question that anything can happen, when are you entering? That's the most important thing. When are you entering? Are you entering when market in consolidation, or are you entering when market is from consolidation, it's giving you a direction, like what I was saying over here, that you should not be looking for a trade where you will get a direction in PM session. When that direction was given, this was your first fair value, this was your second fair value. Look very carefully, there is no fair value gap above this one. Is there any fair value gap? Because that candle is overlapping everything. So from here until here, this is your first fair value, and from here until here, this is your second fair value. Market traded that fair value, came back, took that liquidity, done with that expansion of cycle. But how the bodies are trading, that is where you are marking your consolidation. Aren't you seeing your consolidation? When in trading view, low of new week was traded as if okay, okay, so serious, am I missing something? Just a second. So if, since you're saying that part, let me see if I have marked it wrong or not. No, it's on the body, it's not on the week. So that's perfect, that's also perfect. So the previous close and the new open. Okay, so I think this week is what here is not reaching there. See, I mean, uh, what can I say? I don't even have the exact opening gap marked over there. So, by the way, today's settlement is still sitting here. Okay, and if you mark the settlement from the 9:30 open until that close here, and then switch back to your electronic trading hour. This is what it looks like. So this was that 9:30 open, market traded only 25% of that, but exactly at the midpoint you had those equal lows sitting. So that's why that is a very good sell side to target. Now about your new week, let me actually check from the 15 minutes chart how it's looking over there. Is that the one? Friday and Sunday? Yep. So the open, are you damn serious right now? Are you serious right now? Because this is a huge problem for me, man. Remember, I was literally framing trade because it didn't trade. Although it's going again because I believe at the midpoint there is relative equal lows, or market can even continue higher for the other liquidity level, as I was showing earlier. But for that, I want to see first it's broken or it's breaking that new week. But this is literally a huge problem for me. Because at the first week it was already traded. How the hell it's a gap over here? Oh, come on. And that's why I'm still not moving all my accounts. That's why I'm not going or aiming for any bigger profit targets or profits on this specific area. Fucking hell, bro. Yesterday as well we didn't got that 9:30 entry because wherever that low was, it never traded back into the fair value. But on TradingView it traded. It's a very hectic thing. I have to mail top a step, like literally this thing, this is a problem. This is huge problem. When you are trading and you are seeing false information, every calculation is going against you. Whatever you are doing, it's everything is going against you. So yeah, I mean, I don't know, like I should, let me actually write it down some places, because I want to literally give them the screenshots with the comparison, because this is bloody bullshit. Same market, how come it's a different price action? And they are using TraderPath data. Okay, the feed is coming from TraderPath as well. I don't know why the hell it's, just look. If that was there and now market is falling, I would look for framing sell shorts. Instead, I'm looking, because it's not reaching there, I'm looking for another high to form over there, then maybe the market structure shift or whatever. And for the whole time I'm looking into these equal lows. So this is a very hectic thing. No, this is in God. Okay, I thought you were talking about N dog. So new week opening gap, new day opening gap. That is here. That one was okay. I'm talking about here. It was not traded over there. If you are looking at the smaller one, like there is another one older from around this area, very small one. If you're thinking about that one, then that is different. I just removed it when I started the stream. I'm not looking for that. All I'm looking for, if it can reverse again from after trading this candle low. Okay, because there was no week over here. But if it continues to fall, I'm not seeing any sign of falling. Okay, let me remove that one and that one. there is no bearish fair value. It should still go inside that new week opening gap. The only thing, remember, 1000 times I was mentioning that this candle has no wick. That is the reason I'm not comfortable with that 50% or like placing a stop loss or even with the entry. That's why I just put a thing like this. Okay, and that is that level. Whenever your fair value candle doesn't have a wick, at least wait until market can come 50% before you can enter, or even better if you can aim the lower portion. But that is a not entry from there, but after entering, look, inside of your fair value you are seeing some possible order block is forming. Maybe now you are looking for your entry and putting your stop loss below this or below this, whatever like feels safe to you. If there is no wick, that is a target for the market, because there is no manipulation happened on that candle. Every candle, remember how it opens. Open, low is created, then high is created, and then market will close like this. That is a form of a candle. Here there is no wick. It opened and then boom, went to the high. So that is why I was mentioning that wick candle, that there is no wick over there. Anyway, whatever it is. So about your market cycle, yes, this is the cycle. From a consolidation, it will give you an expansion. From expansion, it can give you retracement, or in the form of retracement, you can get your consolidation as well. For example, this is where you are getting your consolidation. Or here, when market was going higher, to trade that fair value, the bodies were already indicating towards a consolidation. It can happen this way as well. But when after doing this, market is again going towards that fair value, like what do I mean by after doing this? See, like this move already cleared your sell side liquidity. From the swing low, it is retracing to a fair value gap. But after that, market took those liquidity, the body is still within the same range, and then again going for that fair value. And when it was going, this time, look, like it is literally giving you internal structures. Okay, relative equal highs or lows, like sorry, relative equal lows taken out, market structure shift with displacement, fair value gap, going higher. I'm not saying use this fair value, because it's just one single move and one single fair value, and it's still well within your consolidation range. But after trading the fair value, when it is going higher, it's creating multiple fair value gaps. That's why I marked only this one and that as my sell side, because I believed when the sell side will be taken, market will come for this new week opening gap, at least the high of it, which will be trading this fair value, if not the midpoint. Okay, and there is your 15 minutes breakaway gap sitting right here, which is overlapping with your settlement of yesterday. So that's why I didn't mark that fair value. I know it's trading, but what I missed is from 9 it already created another one. I was not looking into this. I was actually making coffee, as I said. So I was doing all those wash ups and bringing water, boiling water, this sort of thing was happening anyway. But that's the case. So when consolidation happens, you have nothing. You sit on your hand, man. When the expansion phase starts, it will give you indication that okay, I'm now expanding, because you will get your fair value gaps to enter. You will get your direction very clear. That is the direction you want to be. You are not willing to enter into a consolidation, so don't worry about when it is consolidating. From the consolidation, if you can identify the retracement and reversal, the difference between those, okay, that is where you will find your better direction and early entries. I hope you got the point, like how you can use the market cycle. Or simple, okay, very simple thing is, price always goes from inefficiency to liquidity, and from liquidity to inefficiency. That's the easiest way. These are the two jobs that price does. So if you are taking a entry when market is filling sorry, what I'm saying, filling up a fair value gap or filling up a inefficiency, that is when you can target the buy side or sell side. But when market is, your entry is because it's going to a inefficiency and then reversing, then you should be targeting the next inefficiency. It's inefficiency, liquidity, liquidity to inefficiency. However you can find it valuable, use that information. Only two things: focus on the inefficiency and the liquidity. If you're confused about the market cycle or anything, if you can understand it, it's better. You can call the things or you can avoid the things. That's why I mention it over and over again. But if it's hard, then start with the simple logic, which is after taking liquidity, it will run for rebalancing imbalance. That is where you have to take some partial, because you cannot speculate that it will break a higher time frame point of interest and risk for your another higher time frame point of interest. I hope you got the point. For example, what was this area? See that weekly, sorry, I copied it, so the high is on both plus. So this is that weekly fair value, the inefficient area. Okay, before market was rebalancing imbalance, from there market went for another, what, like all these buy side, above the buy side you had inefficiency. From the inefficiency, where did it came back? Like right here. Okay, right, that move, we all know what it did over here. It's a huge inefficient area. It filled it up completely, then all the way back to what? To this inefficiency. From this inefficiency, like after filling this, all the way back to what? Above that high. After taking that high, it's coming back where? Below those low. If you can find any other inefficiency around that, better, but all the way back to these low where you had some liquidity. From here, okay, it ran back where? Look here, fair value gap. This part was still unfilled, or it was still inefficient. Filled that up all the way back to liquidities. From there, where is that liquidity? Inside of your weekly inefficient area. From there, where is it running? Another liquidity where you had small inefficient area over here, and if it can go through this inefficient area, especially that new week opening gap, which we can use multiple times, if it can go through there, you have more inefficient area sitting right there. So your focus will be how market is going through that fair value for this 15 minutes. If you are using 15 minutes as your higher time frame, then this is where your next focus should be. Or you may look for a possible sell short setup happening at inside of this area. Okay, inside of this is where you are looking for your next sell short setup. Yes, you can still use this new week opening gap to look for that, but for that what you need, look here, you have another inefficient area right here. Okay, because when market is trading that area up, if market doesn't fall from here straight away, because it has filled that small inefficiency and traded back into the weekly, or the what it calls the most powerful PD array of ICT, which is new week opening gap. So it is trading there. Now if it gives you that setup, it is already rebalancing imbalance. Where? Always, if there is a liquidity sitting right below a imbalance, that imbalance can be a high probability. Now here it is like too small. It's like when I'm zoomed out, I barely see that inefficient area. So that's why I'm more focused on the one above, not this one. And that's the reason I'm still expecting market to go inside of that area. So anyway, I hope you got the point that why exactly market does what it does. Because inefficiency to liquidity, liquidity to inefficiency, that sort of thing that is the only cycle of the market. So wherever you are taking a trade, your first focus should be the premium inefficiency of a range, the premium or discount, whatever it is. That is where you should take a partial and then hold the rest for the extreme low or high. Or if there is any other inefficiency, let's say you took a buy long, so if there is any other inefficiency right above your buy setup, you can hold it until that far. You don't literally, because let's say like this is a buy side I have marked over here. If this market can break this area, are you taking your profit straight away here, all of them? Maybe yes, it's good to take some partial, but are you taking it here? Now from here, why market should fall? What can stop the market at this level? I'm not seeing anything that can stop the market. So what can stop is above there, so I can target until that. That's how I target. Okay, and whatever I said, this chart is still played out because of the like right above this level I have some equal lows sitting, and there is a inefficiency over there, and I believe it is going for that area. But it is still played out, but would be great if I could see that this week is all, like if I had the precise price action, it could have been even better. Okay, same thing. Okay, same thing, like this huge fair value. If there was a week, trust me, if only there was a week, this fair value, the highest probability was market would never go any lower than this. It would go literally from here. It came below that candle just to trade that area. Why? Suggest how this is working for me. Okay, let me show you this thing. Look at the 5 minutes right here. Okay, there is no manipulation. 15 minutes, no manipulation. Fair value gap, you can say 15 minutes fair value traded, 5 minutes fair value traded, 1 minute fair value fully filled or fully balanced. What you are willing to see, this low is not getting violated. If market now falls and goes below this low, you are not worried about your 15 minutes anymore. At least I'm not worried about my 15 minutes anymore. The reason behind that is this low now is valid for shifting the market structure. It has already rebalanced a huge imbalance over here. 5 minutes, there was that, and it traded just on top of this one as well. 15 minutes, it traded just there. Okay, like if you draw the fair value gap, it is trading that fair value gap high right over there, just like that way. So whatever market is doing, it's already giving you the hints or the story. You have to just identify those levels. Didn't like guys, you are with me from the beginning. Tell me what I was telling about that candle or that fair value gap. When I saw there is no wick, what did I said about this thing? When I saw it didn't tap, yes, on trading view it tapped, but on my chart when I'm seeing it didn't tap. What did I said about where market is going? Even here, midpoint. Why I said midpoint? There is this. Does it make sense? Now I remember this from yesterday because this is where I had my London session entry happening. Like literally from this move I was in a trade until this 2070, like 20,070 level. And this is where I took that buy long until just this equal highs. You don't have to target that big, man. I was trading MNQ, right? I was trading only 0.5 NQ. And that made me $3,000 plus on one account, and my funded on, I just targeted until that far. Remember that 15 minutes fair value here I was talking about? So on that's why on that one I made 950 or something, because I targeted until that far. By the way, I scaled in when I was talking about this thing. When I was talking about this area, you are looking for a possible SMT divergence. Remember, I scaled in 5 more lots here on the bigger account. That's why the profit until this far, it came $3,000 and that one was 950. Okay, because I scaled in. The same thing here. Okay, it has gone there. If I'm right about the direction, okay, because it left so much sell side liquidity, this can be the area from where you can get your lower market structure shift. But for that, look, what is it looking like on your chart, or what is it looking like on your chart? It's going higher, 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 higher. It's just doing that. So you are not straight away looking for a sell short for just by marking this low, or even the low I talked about, by marking that one. When that is happening, at least your 5 minutes or your 15 minutes is suggesting that yes, I'm now shifting the market towards the downside by maybe a change in state, by maybe a fair value gap when you are getting that 5 minutes market structure shift as well. So at least you have some higher time frame than just 1 minute to suggest your idea that now it is willing to go lower. Even better if you can wait for a 15 minutes bearish fair value, because if you see, it's creating 1 2 3 4 5 6 bullish fair value when it was going higher. So it's even, you can literally wait for one single bearish fair value to form before you can actually identify your sell short. Yes, maybe some scalping can happen. That's up to you. I don't know how you manage to get your scalping entry, but if you are willing for market is super bullish, brother. Yeah, exactly. That's what I'm saying. So like if you are aiming for any sell short, like if you are bearish by any chance, then you should wait for your higher time frame to confirm that. And always be fearful of the candle that created your fair value. If there is no wick over there, or even the third candle, okay, even this candle didn't had a wick, I might have worried about that candle too. This candle had no wick, market will come there for even, I don't know, even it can go a tick or two below that as well. The only reason is that manipulation is not there. Need 15 minutes CSD. Yeah, even better. So yeah, I mean, tomorrow I'm going to request my second payout from that same account. Okay, I spent $160 total on that account, and I'm going to request the payout altogether. It will be like the first one was 21, and tomorrow at least I'm going to request 2200 or more. I don't know, whatever it is, 50%. I don't care about like as long as my balance is above $2000, I'm happy with that um, withdrawal request or whatever. So this, that 150K account is already in 2 weeks. It's giving me nearly 4,300 or $400. I think next withdrawal will be 2,300, so it's like 4,300 $400 in 2 weeks. Okay, this is US dollar, and I will share with you guys after requesting the withdrawal. Don't worry, on my Discord I will share that. Which proc from? Yeah, bro, I'm using top step mostly, like my Apex and the funded future. Funded future is good, but their scaling plan is something I'm not liking. Like I made a big profit, now I have to cover up that bloody amount by a lot. I mean, let me actually see if I have that. I don't know where did I put it. So by the way, on my Discord I have uploaded the 2022 mentorship, the doc file. Too many videos. I have to either upload some or I have to delete some. Consistency rule calculator, this is the one, but I don't think if I have uploaded or not. Let me check. Like updated it or not. Or did I put no? What is it? Consistency, do you remove contents? Let's see. So how this one works on my funded future. Okay, so on day one, if you even make $1,000, did I forgot how I can use this bloody thing. This is from someone. Oh, I put it on a different section, that's why. Here I have to put it, I have to put it here. So if you make $1,000, you have to make another 2,500 to meet the consistency rule. Now if you make the next day, let's say $1,500, now you have to make 3,700. If you made, let's say, $500 the next day, it remains the same as long as it's not going above your highest. Now if you make, let's say, $2,500, now you have to make even more. So until you meet this, you cannot request your withdrawal. You have to maintain 40% of your highest day. And when the day is like, they have literally better risk tolerance. To be honest, they have better risk tolerance than top step, and you can pass it in one day. They don't have restriction regarding that also. But you can, like, on a 50k account, they have 2,500 as your max drawdown. I don't know if you guys can see it or not. I will try to zoom it in a little. Let's see. So on your 50k, you have $2,500 as your max loss limit, and in a single day you can lose $1,200. Okay, that's the daily loss limit they have set for the regular accounts. If you go for the expert on, it has little less what it calls max drawdown, but you have no daily limit on that one, and you can complete that $3,000 profit in whatever time you want. In a single day you can do it, in other day you can do it, and it doesn't have any activation fees also. But the only thing that is that I didn't like about is that the consistency rule. And by the way, I have a affiliate code for that, which is PTP, okay, ProTraderPath. So if you ever look for that, my funded fee, yeah, but there is one thing. Let's say you made $1,000 in one day, and the rest of the days are 500 this way. You can now actually withdraw the moment your balance, like, see, it's showing consistency meet. So now you can actually withdraw your profit or something, because your total balance went above 2,500. At the same time, you have made the money. You should not make in a single day more than 1,040 after you make a $1,000 profit. So if you are aiming a small and continuously doing that, it's okay, you can still do that. But if your day one is too big, or even like within those consistency rules, you made a bigger profit from there, you will be messed up. Like, it will take longer for you to get to that consistency rule. That's the only thing I didn't like. Yes, top step also have consistency rules, but there is no minimum maximum profit limit. If you make 10,000, no problem. If you make 200, no problem. It's only you have to make. Oh guys, top step at the moment is giving the VIP form. Okay, so let's fill it up all together. The VIP, they will select only 50 members, but you must have to fill this up. Okay, let me actually fill up in a different section because it requires the top step. And the VIP, I will talk about it. If you guys don't know, if you missed it, I will tell you guys, but you can fill it up, the VIP. Are you serious? I need my Discord username as well. What is my Discord username, man? ProTraderPath, I know, but the way they are asking, I have to be even. Oh, come on. Pro Traders Path. Are you fucking serious? Anyway, I have just texted him. So yeah, I mean they have given that VIP form. They will give it like it's hard to get, but why not trying the chance? I'm just willing to see how their program is working over there. Nothing else. I have nothing else to aim for or look for from Top Step regarding that VIP. Okay, so that new week is already done. That buy side is already done. Look at that, bro. From that 5 minutes fair value, okay, the one I marked, from there it literally went like boom 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 in one single candle. What was the, oh my god, $51 expansion at 10.50 was there. That's Wednesday, not today, so I don't know how come that huge move happened, but it happened. And this is the moment where market should trade that fair value before it can literally fall. I'm seeing it that way. Anyway, let's see how the market works. And as I was expecting, like if it takes this buy side, that is the most obvious level for the market to reach. So you can secure some profit there, partial, but still this fair value can be traded by the market. Okay, this fair value is still unmitigated, especially that small 15 minutes breakaway gap with that new week opening gap. There is a high support zone that you can say, like there is a huge support zone right over there, and it's a like $50 move. So I'm expecting, let me check actually. So 50, yes, so market will come to that new week high. A stop loss can be below the new week low. So how big of a stop loss that can be? 18.75, just a little below that new week, and this is what I'm looking for, if that is what market is willing to do. Okay, the only entry that I can take after all this is this, not from top of the fair value, because the stop loss will be shit size, I believe. How big? Yeah, like 30.75 handle or something, maybe. Nah, it's okay. If it comes, it's gonna come here. And that is that huge move. 5 minutes fair value is also right there. Anyway, if that is the case, I am not willing to take that risk. Maybe moving it there and making it a bit riskier, that can be a way, but not before this level, not a tick before this level. Inside of that 5 minutes, I'm expecting market to come until that far. So yeah, I mean that is the top step X, and let me actually VIP means you can only trade with a team, as per what I understood. You are already profitable, you don't need them. No, I know, but the reason I wanted to see that is because like they are giving you some coach, right? They are giving you some coach. Why not, like this is something they're offering for free, why not having free coaches and see how like they think trading should be? Maybe there is something I will learn new, or maybe maybe that may help me psychologically, that may help me maybe maybe minimizing some losses or whatever, I don't know, like whatever it is. Maybe there is something that I can learn from them. They have experience, man. This top step is now 12 years old. The prop firm itself is now 12 years old, and these offers are happening because of the 12 years. So if they have actually something to offer, why not? It's free, right? I'm not paying anything extra. On top of that, there are extra facilities as well, but I'm not more worried about the extra facilities. Rather than that, I'm thinking about learning if there is anything to learn more, or if it doesn't work with me. For example, I shared some other people as well on my YouTube, right? That I used to watch some of his videos, but the day I realized, okay, it's not making sense to me, I stopped watching. It's the same thing. If the VIP doesn't work with me, I will stop looking into the VIP things. Does it make sense, like why I'm actually trying it? Not 4, of course. It's a bigger account. It's okay. I can actually aim for that. I know the buy side is taken, but the high it created, it has to reach for that fair value. That's why. Okay, just to be in the trade, let me do another thing. It's already trading that 5 minutes on. I hope it is not. Let me check what the 25% is. Ah, it's okay. 50. 25. I hope. I hope. If it doesn't come, nothing to do over there because it's already trading your 5 minutes fair value. So it should, but I don't know like how it is coming. And by the way, why I'm not worried about that, you are seeing that week over there. Okay, that's why I'm not worried about market coming to the extreme low of that candle. And even it can be a bigger retracement because no, not really actually, because 5 minutes, like 15 minutes, the way the candle is, it, I don't believe that it is going all the way back to that low of the 15 minutes on. It has some good area of support over there. Just to be in the part of the market that could have been an entry, but I'm not is like yet looking forward to that. Huge fair value gap 25%, that is where I targeted. So let's see if it can give me the entry or not. 25. Okay, that makes sense. Yeah, that's the reason. Okay, I mean nothing else. I'm just, why not, right? Like if for example I even tell this to my viewers as well, like if you think I'm wrong about something, correct me. It's okay. I have no problem learning from you as well. If your correction, the way you're correcting me, if it makes sense to me, I will go with that. For example, this one, if the information you gave me that market has already traded that one trading view. Now here I'm not seeing that part, but I was pretty confident that market is coming at least there before it can go higher because of no week over there. This is something I have been observing for like so long now. It's something I'm observing for so long. And does it make sense why your week is needed over there? Because you don't have like whatever the time frame is. Let's say this is a 1 minute time frame. Now if you go to a 15 seconds time frame or even lower than that, I don't know, even whatever you can call it, there you will don't have any manipulation lower before that explosive candle happened over there. So if you figure this whole move happening in a 1 second chart or even a 5 second chart, this is 12 5 second charts without going a single tick lower, instead going higher. So then it's closing like here. Where is that manipulation? When market is going like this way, there is no manipulation. So it needs that manipulation. What market gonna do? Instead of retracing just to your fair value gap, it will retrace right at that level or a tick below that level. From there, you will see again the move. If the high is again making sense to you. Here I was literally expecting market to at least reach for that midpoint first, because those equal highs are sitting inside of that midpoint, nothing else. Okay, once it took it, retrace. Look, I didn't mark your 1 minute fair value here to look for the buy or next move. What did I mark? The 5 minutes on. Even though the 1 minute one was here revisited, where did the market revisit it? Now you can overlap that area. You are seeing your consecutive order blocks or propulsion blocks, however you want to call that name, but you are seeing those happening there. This week is trading there, overlapping with a 5 minutes in imbalance or inefficiency. Then it gave you that explosive move. So I'm looking into every single part. Remember, like this area, when market was going higher, I didn't mark that 15 minutes fair value. Yes, I can see the new day is traded over there. I'm also marking this one, right? So this candle's low, if market is trading this fair value and willing to continue higher, where is your stop loss? I don't put a stop loss here when I can put it there. So if I'm entering from here, and if this is my stop loss 24 handle, which is $480, if I don't, like, if I'm not able to take that $480 risk, I will reduce the lot size. That's why I came to MNQ, because one NQ is still giving me the same amount of risk, but MNQ I can make it 0.8 NQ or 0.5 NQ, 0.6 NQ, whatever it is. I can adjust my risk tolerance based on the stop loss size. And then remember what I was telling about, at least the low, and I'm seeing for that middle where I had some liquidity on the left. Anyway, I don't want to go again, but this was that. Take a partial at 1 to 2 or whatever the nearest liquidity is. From yesterday you have these liquidities, you can take some partial around that area. This was that setup. Again, from that area, I was telling you over and over again, like, I'm expecting market to reach for that level. So I could look for that entry, putting the stop loss below, but it's a huge fair value gap. It doesn't make sense. Yes, the entry could have been around 50% or 25% that way. Same thing I'm looking here, huge fair value. I cannot take the entry from the top and put the stop loss to the profit. Not audible. Sorry, what happened? Wait, what happened? Aren't you guys hearing me? I don't know, like, what exactly happened. Hey, Pratimesh, bro, I don't know what happened. Parag said he can, Alik said he can, but what happened to you? Yeah, my voice is already broken from yesterday's long stream. I can tell you that, but I don't know, like, everyone else can hear me. I don't know what exactly happened. So why I didn't look for literally a tick from that area, like, keep it that way. Okay, why I didn't look for here, just a tick below that, let's say here. Okay, this is at nearly 30 handle, and still I'm not covering the candle slow, which is here. Okay, but if I get the same entry from this 25% level or even the 50% area, then the stop loss is something like this. So I'm able to risk that much. That's why I'm breaking the one NQ in two different places. If I get the entry, I'm happy to take that entry. But if I'm not getting the entry, and before giving me the entry, market is reaching for that fair value, I'm not looking for the same entry anymore. I'm waiting longer. For example, what I'm seeing right now is 15 minute has created a bullish fair value and a down close candle with that, and this new candle, 15 minutes candle, no wick over there. So I'm seeing market is coming back below this low one more time. so that it can trade that 15 minutes bullish fair value, and my average entry will be somewhat around this area. It will look something like this. I can afford that, so no problem. Just 400 something dollars risk, and it's giving me nearly 3 times the risk I'm taking. If I can get the entry, and if I'm right about my next direction or market move. I'm looking from this on just to make sure like where this on aligns, and then I can move it to here to see how that on aligns. Yeah, so should be alright, I guess. Should be alright. Especially the OTZ. That's the part. So let's see how the market does over there. Mostly the leg is like literally from here, okay, or you can mark that candle, but already traded this on. This can be the breakaway gap, this can be the fair value gap, so market can fill it up on the 15 minutes, but since there are some reasons for not to fill it up completely, that is why I'm expecting market to go higher again. That's the only thing. 15 minutes back, it just barely tapped over there, so that's why it remained a bag. And that is that candle's weak, it's coming lower. Okay, same thing on the 15 minutes chart as well. It doesn't have a week on the 15 minutes, so give it some time, it will give you the entry. Just keep in mind that if it reached already to your point of interest, try to avoid that part, then wait for it to break that for the next level. For example, if it breaks that and gives you an entry here, and this is another buy side sitting right there, this is already good enough level to give you or make you profitable. It's 25 handle. If you can frame a trade around this area and then target that high, you can target a little above that as well. From a buy side, maybe 5 to 20 handle it can go, so maybe 5 handle, something like 30 handle you can still have. Here it has reached 5.75, even more, but I'm just pointing from wherever it's clicking, because it's not clicking exactly from that, so it went at least 6 handles above that buy side. It goes 5 to 20 handles, so when there is a pool of liquidity, lots of liquidity are sitting at a level, you can literally aim for that 5 handle extra as well, if the level of liquidity is not already good enough for you. It has cleared liquidity but left imbalance. That's the reason I'm still looking for that buy long. And remember that part, see like how I'm aligning this with this with this, and along with that whatever already I have on my chart. So this fair value was broken in a single move. That was a 15 minutes small breakaway gap. So now this one has turned into a inversion fair value on 15 minutes. Okay, like 15 minutes inversion fair value. Yes, the power it has or not, that's a different scenario, but it was supposed to hold the price and send it lower, or it was supposed to act as a resistance. Market, one single candle went through that, it's acting as a support now. So for that reason I have what, bullish fair value. I have not just 1 minute, okay, 5 minute, 15 minute, every other time frame. I have inversion, I have new week opening gap, I have literally gap. Just by defining gaps, I have 3 different level of what it calls, 3 different point of interest or level of defense I have over there. So that's why I'm confident about market to come back here and go higher again. It didn't trade the 15 minutes fair value yet, so these equal lows will be taken, and below that low there is your 15 minutes fair value. So I'll just put it this way and you will understand what I'm top, bottom. Okay, So below that low, this can be your inducement. So if market is willing to go higher after taking this liquidity, it can give you literally a very volatile move towards the upside, because that if that is the inducement, the after taking inducement, the move usually is volatile move. So I have resistance, no, it's support, because it was supposed to act as a resistance, but it broke through that. Now it's acting as a support. Same with the 15 minutes fair value, same with the new week opening gap. So this is that inducement liquidity. You find your inducement this way, like 15 minutes candles low is looking like a swing low on your 1 minute. That is your inducement liquidity. When I started the 0 to Pro series, where I started it for literally people with zero knowledge, like no knowledge at all regarding even what is a candle. So my first video was regarding a candle. There I was just explaining the fair value gaps. Okay, like what is a fair value gap and what we expect from a fair value gap. The way I explained over there, I don't know how many of you actually watched, but it's like think of like a bearish fair value. Okay, it is acting as a roof on top of your head. Now for any reason you broke through the roof and like landed on top of it. It's now acting as a surface under your feet. This is the way, like I was explaining over there. I don't know how someone can make it any easier. So it's oh my god. So support resistance, that's how I was explaining those things. And yeah, I mean, this is that inducement liquidity I'm seeing over there. Better when it is taking this, it can create a bearish fair value. So that 1 minute bearish fair value can turn into a inverted. It still didn't trade, so don't worry, the trade gonna happen. All we need to see is how long it is taking and by what time it is happening. This is 11:10, right? So 50 to 10. Where was that 50 move? This was 50. So it has taken this. Just a second, I'm just looking into, like, this will be my average entry. That's why I'm putting it here. Just by looking into the placements I have done, I just put it around the middle point. If I get both of them, the average entry will come around this area. I'll move it to the side just to keep it that way and to place my stop loss. Just to keep it that way and to place my stop loss. So it has cleared buy side. This is the fair value gap. Now I'm just looking into the macro, like if the macro actually worked or not. Macro is more of a, like, it will come on. A week, please. A week until that for, please. Macro is like from 10:50 to 11:10, right? So you are looking into your chart, like it will take some sort of liquidity and give you the opposite setup. So for example, here this is a 1 minute swing high. It has taken that, or from this area in between that window 50 to 10. Okay, it took that, gave you that fair value gap. From that fair value, you have to trust the process, but back test first. Okay, do not just try to trade it the very next day. Your target is only 20 handle, and I can see it already, like it's already 23.75 that I'm seeing over there. So yeah, I mean, that is that case, and you're covering the at least the third candle's high or the recent swing high it created, that as your stop loss for 20 handle target. And this macro could have been a good entry. Actually, I missed the time when I looked at it. Why I am saying this is because I'm already expecting market to come at least here, and it's already offering that 20 handle. So that's the reason also it can go. That's the thing, and I'm looking forward to that. At 25% I added a entry just to be part of the market, and at the next obvious level I put the other entry, which is the new week opening gap high. And covering just a tick or two below that low, especially the fair value gap candles low. But I believe my stop loss could have been even safe around like this area, but just to be safe, because what happened is one single candle went through the fair value, the new week opening gap, the middle was rejecting a little, it can come for that middle as well for the next rejection. That's the only reason I put it below the fair, like below the new week opening gap, and covering the candle that created fair value, just that much. Maybe I will not get the entry, but better if it could come here, because it makes more sense, because inside of a 15 minutes bullish fair value you have another higher time frame PDR, which is the new week opening gap, the highest form of support resistance, or the highest level of your fair value gaps. You have everything, like whatever has a gap, okay, everything is a fair value gap. Volume imbalance is a fair value gap, breakaway gap is a fair value gap, fair value gap is a fair value gap, new day opening gap, new what it calls inversion fair value, whatever your Coach T from Top Step. Hey, here is your personalized trading status. Okay, I don't need personalized trading stats. I hope you got the point, like why I was expecting market to at least come here. It was because it should come. See, it's a huge 15 minutes bullish fair value, like this much. Okay, and that 25% overlapping with new week high as well. So inside of the fair value, the whole thing is literally overlapping the new week as well. So it doesn't make sense just to tap the top of the fair value and go higher. Better if it can come here and then go higher. And this is that moment. If I'm right, market should anytime expand higher from here, because it's not trading that one. By the way, let me actually check the hourly how it looks, because if I'm missing anything on bigger time frame than that will be a issue. Are you serious? The bodies are still inside of that fair value, the whole thing. Anyway, it should not be problem, but yeah, see, like I called it before, because when this reaction was happening from the middle, next time it didn't stop at the top. So I'm expecting the same thing, like it can come until the middle. That's why I'm not putting it below middle. Okay, and maybe this is that moment of truth. Let me put it bit higher. Could have been great if I could see a order block forming around that area. So you just put your limit order before waiting to see how that area will react to price. Yeah, I mean, when market is coming for your fair value gap, you should be already in the trade. Now, if you want more confirmation, then your entry could have been there. Okay, and the stop loss will still remain there, because after the reaction, or still it's inside of your fair value, so you may have to wait until it going above the fair value one more time. In that case, your stop loss has to remain lower as well, because it still has inefficiency. Market can still fill it up. For example, my stop loss is literally around the 50% of that 15 minutes fair value. I don't, let me go for that one, a little lower than 50 I guess, but yeah, like around that 75%. So I'm not even covering the low of the 15 minutes fair value gap. Okay, that is a issue if you are using only your 15 minutes, but I'm using that area has the fair value gap with all other candles, like 5 minutes, 1 minute, different time frames. Along with that, I have so many level. Yeah, I can be wrong. I have been wrong. It's not like I'm not wrong or anything. But when I'm looking for an entry, I'm looking for it from a valid area. Okay. Was I not talking about the high and the midpoint? Why? Because here and here, okay, this high already traded the low on trading view. Here it didn't trade, but whatever it is, it traded low, retraced from there, traded middle and took some liquidity, retraced from there, but it didn't stop on the top. So I'm expecting even if it comes here, chances are high it will come for that middle. Wherever you had some resistance, that is where you are looking for some support. 15 minutes, this one you can still use as your inversion. But how, like, let me go back to that area. How we are looking for that? For example, this is that fair value, okay? Now I had this fair value as well where it found most of the support. So market can literally trade until that fair value to make that inversion. That fair value. It acted as a support. It acted as a resistance. Market went through that fair value. It can act as a support now. No problem with that. But when I'm framing it, I'm seeing if I have enough reason for market to continue higher or not. Yes, could have been even better if the buy side was still there. But what I'm seeing is market took the buy side, immediately it's coming lower. Yes, the hourly fair value is still there, like it still didn't break the hourly fair value, but I'm seeing the inefficiency sitting there. What did I said? If you have inefficiency right above your liquidity, market should go for that inefficiency after taking the liquidity. So that is that entry, this is that entry. Now see, like, I manually thought about the midpoint. This is that midpoint. First thing I have to do is I have to take a partial at 1 to 2. I don't care about what level my 1 to 2 is. At this level, I'm gonna take 5 lots off around that area. Although I believe market should go here, and this is where my final take profit is, I still believe my first partial has to be there. Are you seeing the reason? Like, I have a 15 minutes fair value that was supposed to hold the price, that now turned into a inverted fair value. So it is acting as a support. I have a 15 minutes bullish fair value that is acting as a support. I have a new week opening gap that was acting as a resistance, now broke through that, it can act as a support as well. So I have three different things overlapping just from higher time frame, like 15 minutes time frame. Now the same fair value area, I have a 1 minute huge fair value, I have a 5 minutes fair value, and that 15 minutes you already know. So I have every time frame suggesting that there is this inefficiency sitting over there. At the same time, market is bullish. I'm just following the trend, right? With that, that is my structure already. What did I said about the fair value gap? Like, I'm willing to see that the body is staying around that 50% level. Yes, what you are seeing over here, just the one down close candle closed a tick or two inside the 50%, then the very next candle went above the 50%, now it's rejecting. So this is that thing, okay? This is that part of the time where I'm using my resources to figure out a entry, because to make me wrong on the entry, market has to literally go through so many higher time frame point of interest. I'm not just using this one, remember, I'm not just using this one as my entry. I'm using different things together, blending it together to look for entry. You must have to have 3 level of defenses before you are aiming for, like, your stop loss has to have 3 level of defenses. So for me, those 3 levels are 15 minutes inversion, 1 minute, like, just think about 1 minute. 15 minutes inversion, 1 minute bullish fair value, and the new week opening gap. That's good enough. I don't need anything else. I hope you got the point, like how I took that entry. Most of the entry is either, it's mostly limit orders, okay? I'm placing limit orders. I'm already expecting or calculating something. Based on that, I'm already in the market. I'm already in the momentum. If I'm wrong here, what can I do? Okay, let's say if market came below that and stop me out, you are already seeing that big fall. By that time, you are seeing, like, when market is coming below this level, now you have multiple PDRS for looking for sell short, don't you? So it's that part. Okay, I don't know if you got anything or not, but it's that part. Like if I'm wrong with my 3 level of defenses, I can look for sell short because I have sell side liquidity sitting there. Okay, maybe I will not hold until there is still a breakaway gap or a inefficiency sitting below this area. So when market is here, I can look for this low to be taken out and market to trade inside of this fair value bit deeper. That is what I can look for. It's the same thing. 11:24. Didn't like the time and the way market is trading, because after that inducement I was expecting bigger retracement towards the upside. So for that reason, because when the PM session will start, I'm expecting a sell side delivery on the market. Like PM session will literally deliver for the sell side, because they need to take out their profits. Okay, the big sharks need to take their profits off. It's okay until it violates the whole thing. I'm still in the market, but the moment, like this part I'm not liking, that it created new fair values and it disrespected those fair values, because it can turn those lower time frame fair values into inverted as well. That is the only part I'm not liking. By the way, let me check on my time. If yeah, that is that 15 minutes bullish fair value gap. Mid rejection, top rejection. This is where I need the rejection. I don't need that piggy moves. I got you. I think it's wise to have more than one level of support to protect your trade. Yeah, that's literally ICT said. That's what literally ICT said. Like your entry must have 3 level of defenses. It can be a breaker block, it can be fair value gap and order block. That 3 level. Or it can better if it's that way, or it can be a breakaway gap, a fair value gap, and a order block if you don't want to mark your breaker block. So this is the moment of truth. It created equal. Better if it can take that equal before going higher, but if it leaves this way, then from after reaching there, that is your first target if you can find a sell short setup. And this is maybe going to be that inverted. Let it close above that fair value first before speculating anything, but chances are high, because PM session, like lunch hour, is coming very nearby, so it is going for that high one more time very soon. It should actually. You never move your stop loss or TP after place a trade? I move only once, mostly I move only once. When is like once I hit my partial, I move the rest of the position, like my stop loss to break even. That's it. You can leave it there. I trail sometimes, like depending on what type of market condition I'm seeing. If I'm seeing very precise market condition where I'm marking some levels and market is not breaking those and literally respecting those and continuing the move, only those sort of situation I trail with the market. Otherwise I don't trail. It's better, like if you don't trail, the best part is you take your profit or whatever, like most of your profit at the nearest liquidity. Okay, and then once you take most of your profit or the partial off, just move your stop loss to break even. That's it. You will be profitable. It's that simple. So I don't know, like if you got the point or not. You will see, like the moment. Okay, let me actually make it even easier for you guys. So this is my stop loss, that is my entry. If it can go 1 to 2, okay, I don't know how the 1 to 2 changed over there, but some, this is that 1 to 2. So the moment it goes there, my stop loss will be wherever my break even is, just a tick or two above the break even price. Okay, if I'm right, if it doesn't stop me, but that's the only time I move it. And my focus is mostly on this. See, I'm not even targeting that high as my target, just 1 to 2 is where I'm targeting. Why? $445 worth of risk is what I took. So if it goes to 1 to 2, even I can take more over there, maybe 7 lots, okay, at the same level. So out of 10, I'm taking 70% of the profit, which will be out of $900. I'm taking whatever, like maybe $618 or something I'm taking out over here, then moving the partial over there and leaving the rest for that. Maybe I know, like, if it's going for that level one more time, then this is the ultimate destination for the market. But still, why I'm not targeting everything over there? What if the same area it has rejected multiple times, like literally, see, like it's all weeks around that area, relative equal highs, but even in 1 minute everything is all weak over there. At the same time, on the hourly chart, if you see, market still didn't close above that hourly fair value. Even though the liquidity is taken, it still didn't close above that hourly fair value. Okay, so it can do the similar thing from that same area. That's why I don't want to target with my entry. I don't want to target the extreme one. Even better if you target just this. Like, look, it's giving me $300-400 already. So if I just target until this for to secure some profit, you will still, like, by this time, how many handles? Let's see. This is 21.75 handle. Let's say 22 handles. So if you take 5 lots off over there, that will give you around $210 already in profit, and it's reducing your risk by half as well. Now if you move your stop loss to break even, or even leave it where it is, if market comes, the total result will be around break even trade. It's not a losing trade anymore. But for the rest of the position, then I will have to target until that far, and it's like 1:1. So I always look for 1:2. No matter what, I'm right or wrong, wherever the liquidity is, I look for at least 1:2 for my target. The only thing I'm worried about is the time it's spending around this area. I'm expecting market to, reach for that liquidity one more time soon, and the same thing is maybe happening again over here. Let me put a mark on this level and change the color to maybe yellow or something. Yeah, so what I'm seeing here, maybe after that expansion, it is on the 15 minutes, it's looking like a consolidation. It's doing the similar thing. The bodies are staying around the same level. It's rejecting from that specific. Look at this rejection. Okay, that rejection. So the bodies, the moment price went above that, it's rejecting. So I might be looking for a bigger consolidation range around this. Let's see. I didn't, like, it didn't hit my stop loss yet, or TP yet, whatever it is. Let the market do its job. Only thing, it's taking too long. Okay, if the market had to expand higher, the 15 minutes fair value, it has been trading for too long. Okay, literally 3 candles it's been trading there. That's the only thing I'm not liking about that, because after taking those inducement liquidity, it was looking good until this far, but then again market came and created equal low over there. That's looking like a possible consolidation may happen. So if again market goes above this and comes back into the range, that is where we will see if market is in consolidation or not. Maybe the market is taking too long because you said you're gonna finish early today, lol. Yeah, maybe that might be the case. Literally, I was thinking about around 11:30 I will finish today, but unfortunately, I even started late. I was feeling so, down, like my body, the energy is so down after yesterday that I was not thinking about even streaming first of all. Then I thought, yeah, maybe I should do a small one, but quick one, I mean. And that quick one is turning now a big one because market is not even hitting the stop loss or even the partial take profit or whatever. After taking partial, I could literally close the whole position over there as well, but it's taking too long. Usually, what time EST you start streaming? So UTC -4, right? So I'm using the New York Standard Time, and for that time I start right before 9:30, so that the AM session, okay, only the AM session. Right before 9:30 I start the stream, and I plan to end it before 12 because from 12 it's already lunch hour. Although market can give you some good moves during that, but uh, doesn't make much sense because ICT said to avoid that session, and even most of the ICT traders actually avoids that session. So better if you don't find your setups or look for setups around that, because what happens is during the lunch hour sometimes it gives you good expansion legs or good moves, but most of the time what it does is it takes a recent low, then a recent high, recent low, recent high, this consolidation, but in a different manner. It will give you very good setup just to go the very next candle high or the very next swing high that formed. You are not even marking that as your swing high, and then it's literally reversing on the entry and coming for the low again because lunch hour, right? So for example, if I'm willing to stop my entry, what I will do, the moment market goes above this high, I will close my trade and finish the entry and stop the streaming, this sort of thing, right? It's the same thing. If the lunch hour is a thing for trading, then what does they do? They will push the price above a level to exit out of the trade, or below a level to exit out of their trade before they can go for their lunch or whatever. No one, like the trading floor, they don't leave their position open for like when they are not attending the computer or the screen. They observe everything, they buy sell. It's, I don't know, but let me check actually one thing. And let me remove it. You know what the take profit is and what the stop loss is. So what is that indicator? Volume on chart. Volume profile? No, not that one. That sucks. Volume. Why? Okay. Look at that. Its volume is declining. Okay. It was increasing here, which is on this move, but after that it's literally declining. So are you getting the point? Like, look at this huge candle. The very next one, this is how, like, people entered, big push to exit out the maximum amount of the trade they have taken. So on this candle, the maximum exit happened. Then the move happened towards the upside. It was giving you this, but then look at all that. Like, the reds are bigger than the greens now. So what it is suggesting is they are looking for it to exit out of the trade. So market is, see here, okay, what is this, 10 a.m. Look at that size, nothing was even nearby. Look, before that move started, like the volume here, okay, it was increasing, it was building stairs. Big volume kicked in, market retraced back to what, like rebalance that imbalance completely. See, like this huge thing, most of the red candles, it rebalanced those imbalance so that more entry can happen around the same area. It distributed that specific area. Okay, from there that big push came. The very next candle is even a bigger sell, which you cannot see over here because lot of people after this candle in FOMO entered into trade, new trade. So the candle size is it's going up and going down. What is it? When it's turning green and when it's turning red, black. Let me tell talk about the order book a little bit. I don't know like if I have the knowledge to discuss it or not, but okay, it's not gonna work with this one. So instead of that, let me talk about order book using this, how the order pairing work, or how when the market turns green and when the market turns black. I mean, if you can literally keep some information from ICT aside, okay, because ICT doesn't believe in this sort of thing. So I'm just trying to give you something that ICT doesn't believe. So let's say you have 5 buy order here. This side, the lower is buy orders, okay, and the upper will be sell. I will actually change the color to green or something. Oh, it's barely visible. And then let's say there is 10 and there is 20. Okay, now you have, this is the price level, or whatever the level you can see around this and this. Okay, let's say at these levels this is your order, and the sell orders, let's say here someone is willing to sell 20, and then at this level maybe 5, and at this level 10. Now the people who are willing to buy at this level, they are now buying here. Or think this way, these are the sell ones and these are the buy ones, if it makes any sense to you guys. So these 20 people or 20 order, he was willing to buy at, let's say 20,032. Okay, but the 20 orders are here that they are willing to buy there. Okay, they are not willing to buy, sorry, they are willing to sell at 20,000, let's say $39. Okay, 32, 39. So either these guys have to lower the price or lower the asking price for them to buy, or they will stick with their price and these guys have to buy at higher price. When they are aggressive, okay, when buyers are aggressive, what they will do, they will buy whatever the market price is. By the way, the middle line is representing your current market price. Okay, wherever the current market is, for example it's 38, 39, whatever now, that is where your middle line is. What market is doing, if these guys are more aggressive, like buyers are more aggressive, they will buy from here. So what gonna happen is this 10 will turn into 0, and on this side the order field is 10. Now how many is still left over there? So current price is now moved where? Here. Okay, because there is 0. The 0 is always the level where your current price is, and instead of 20, what is this now? This is now 10. Now where is the next entry? If they are still aggressive, this is where the current price, you have now 0 over here instead of 5, and you have now 5 left over there. So you have 5 here and that 0. Now to buy that 5, he is going here again. You have 15 left, and then this guy is turning 0. Now these people have to move their target. If they are like that, if they can do it, or that is, this is those limit orders that's still pending on the market. current price is here because you still didn't make it zero. Okay, even though it put there, that's the week happened over there. But since the deal is still unfinished, this is where the body is ending. That is where the body is ending. Okay, see that right before that lunch hour, this is what I'm thinking about. Like, it's going for a high, then a low, then a high. That can happen right now. Anyway, let's see. So I hope you got the point. So what's happening is, when buyers are aggressive, price is going higher. When sellers are aggressive, for example, the same thing from here, no one is willing to compromise, then seller said, okay, price is stack. For example, I'm seeing it this way, I'm closing it on the market. So what's happening is, whatever the market price is, I'm willing to give the person, like, you will never get the current price, you will get a tick or two lower than what the current price is. Here, what is it happening? Sellers started selling off because buyers are not willing to buy over there. So whenever, let's say, this 15 was there, but this was the current price, so this guy now is willing to sacrifice, okay, or willing to take whatever the offer is. So he is taking 10 from this and 5 from this. So end of the day, where is the price coming? Until that far. Now if the settlement is done, then your new candle will start from this area until there is a new order. So always it's pairing like that way. I don't know if that made sense or not, but that is how your green and black candles are formed. If you have the level 1 data or level 2 data, you can see the order pair happening on the DOM. Okay, DOM, depth of market. I think DOM is also offered by Top Step, but I don't know if did ICT teach this. How can ICT talked about few things in different places, but I don't want to say ICT taught this. This is not something from ICT. That's why before I started the topic, I said, if you can keep aside your ICT part, then you can get the idea. ICT talked about the boot map. Okay, whenever you have boot map, you on the boot map you can see, like ICT said, if you can even overlap or align boot map with my concept, you can get a lot of setups or even higher accuracy with your entries using my concept. So when he was talking about boot map, that is when I actually started looking forward to boot map. I don't know I still have it or not, and that is when I actually saw those things. I should have, because I don't usually remove boot map. Let me check the other screen. I don't know, maybe I have removed it. Yeah, maybe I have removed it, but yeah, I see it talked about boot map, and when I took the boot map, I was literally finding those information there, like how the market is pairing the orders and when it is going higher and lower. Okay, I hope that makes sense. If not, then I cannot make any easier for you guys. Come on. 11:50 to 12:10. The last 10 minutes, like last 20 minutes of the lunch macro, starting and ending. I want to see how the market is doing on that specific part, and it's still doing the same thing over there. Okay, it's reaching for that body level, equal bodies. So I'm seeing a bigger consolidation happening. It can happen after a big expansion. You can literally look, this consolidation from there, this was that expansion, you can expect a small consolidation there. Okay, it's nothing wrong to consolidate after this, and also the launch hour is very nearby. So what I'm seeing right now, yes, I might not get the profit up there. I have to maybe take the profit in somewhat around these recent swing highs or lows. What it did, it prepared for that launch hour. Equal lows, relative equal highs. That's what I'm seeing at the moment. It's inside of that consolidation, like literally the entry I took, it's now facing the consolidation phase. And for that, the best part or best idea is to maybe exit out of the trade whenever you are in decent profit. So let me do another thing. Keep an eye on that one as well, because I believe market, even if it consolidates and gives a deeper retracement or something, like deeper retracement mean if it consolidates around this area and in 1 minute if you see it's coming below this low until a body, okay, the same thing on the 15 minutes from the consolidation with outside the range, okay, until the body can pass the range on the 15 minutes chart, don't worry about the 1 minute price action. This is the macro, this is 1150. So if anything happens, this is the place where it should happen. I just moved the whole thing to 1 to 2 because it was taking too long. And lunch is here. That same yellow line. If it rejects from here, I'm pretty confident that market is not going there until the lunch hour is finished. But if it can continue higher and close above that range, especially on the 15 minutes chart, which still has 9 minutes something seconds left, then by that time you will see market reached over there. Macro, this is that macro. So at 1150 the candle, look, all those candles and the 1150 candle. Let me remove that dotted line so that you guys can see properly. Now could have been better if it can create that fair value, otherwise it has cleared some buy side liquidity inside the macro and again rejecting around that same area. That's what I don't want to see. Continue please. Want to finish the bloody stream with this trade in profit. If I see a bigger candle expansion, okay, I will quickly move it there and put again the 1 to 2, like the partial over there. If it comes back into the range, I will not do that because at that level. Anyway, this high and that level, I mean, only if I see expansion, I will trail it there, like put it back where my previous entries were sitting. But if it comes back into the range, that is when I will take the full profit around this area. Because why I'm saying this is because market to go lower, I believe it should revisit that imbalance, because the buy side was sitting right below the imbalance. That's the only thing. Okay, it's showing me around $600 profit, but I'm more of taking 1:2 first and then securing anything extra if I can. Just waiting to see like if it can create a new fair value and make this as a bag or not. And remember that one I was expecting as an inversion, so don't worry about that part. So if this can be the bag or breakaway gap, because it's breaking away from that level, I'm expecting another fair value. If that fair value forms, I will take partial 7 lots here and 3 lots until that fair value low. But if no fair value forms, that is the final take profit level for me. Because I'm not willing to trade or talk when the market is in lunch hour. Okay, that's the reason. Okay, that's the 12 a.m. This is the macro time. 12:10, 11:50, and this is that macro. By the way, let me do another thing. Put it like this way and aim for only 20 handles. If the entry it can give, because that is that macro expansion leg. This is that macro, okay, like just like that. Although in macro as well, I saw the 1 to 2 works pretty good, but 20 handle is more consistent. That's why, and more than enough actually. $400 if you take just one lot. By the way, buy now. Since market is there, I'm putting it in break even. Although I don't do it until take the partial, but since I'm seeing this structure and I'm willing to finish the stream soon, so let it be that way. Nice explanation. Thank you, bro. Thank you. I hope the explanations are actually something that is helping you guys. If it's not helping, then that is a problem for me. Okay. If it's not helping, then I'm wasting my time, energy, and your time and energy. More importantly, your time, okay? Because I'm still trading or trying to make more monies on my accounts when you are just maybe listening to me. So um, I don't want to be that guy. That's the main reason I don't want to be regular on YouTube or streaming. But yeah, I mean, my friend was actually like T2 was actually pushing me to start, because he said you have a lot to offer the people, so why are you stopping? Don't stop. And then let's see. Okay, I will try my best to do that. The biggest issue nowadays is the 1 hour extension, and soon there will be the same thing on New York as well. So like when there will be the daylight saving for New York, okay, I will be literally messed up, guys. Literally messed up, because now the market opens at 12:30 a.m. Okay, Australian midnight is when the market opens, the New London AM session, and the New York, if there is a what it calls daylight saving happening, it will open around 1:30 a.m. So I really don't know how I will be able to stream or talk up, like even sit with you guys. And you all know, like, I have another job as well, so I'm not willing to leave the job yet. Okay, like to be honest, the money I have already made from trading, I have invested a lot of money with my friend in a business. So until the business is good, like I'm just starting right now. So this is 12, no, just 3 minutes before 12, so should be all right, I guess. But if it's coming back, especially that 15 minutes candle is closing back below this level, this is where I'm willing to, it's that macro entry you got. You have relative equal highs now. Let's see if market is willing to go higher or not. Okay, the volume on the sell increasing. Okay, lunch hour. I just put this indicator on to give you guys, like, look at that volume bar, how it's extending higher, and look at those buy. Even though the market was going higher, it was decreasing. The buy was decreasing. That's why I left it over there, to give you guys, like, every time during the lunch hour when it goes above a high, you will see a big volume spike on the sell side as well, because the whole morning session market was going higher. So to exit out of the trade, they need to pair it with the sell orders, okay, or those buy stop orders, sorry, sell stop orders, either the stop losses or the stop loss above there on the sell shorts, or the stop loss below on the buy longs. So they are pushing the price on those levels. Sell stops and sell limit orders are what they are looking for now. I don't want to see any sort of respect to that fair value. If that happens, that's a red signal. Literally, if that happens, that's a red signal. Amazing. Close above. That will be even better. Because how long? 21 second. Okay, this candle will decide where the market is going. Okay, so same thing. 5 and 2. 7 lots. Come on, overlap. Yep. This is where the 7 lots. Why I did it is because I'm seeing that that market had the momentum over there. So let's see if that momentum continues or not. And by the way, the consolidation I was worried about, it broke above that consolidation. So now is a better time to look for bigger move towards the upside. Only thing is after reaching for a high, it should not do something like this, because that will tend this trade, or that will take this trade until maybe 12 15 12 30, which I'm not liking. Come on, I have given you some sell limit orders over there to exit out of your profit, man. 500 something. It is still can be a thing to worry about, because one candle closed above, next candle closed below. So if it respects here, that's a problem one more time, because what did I said, fake can happen only once. Okay, so wait until that. And this is the macro, only 20 handle target. Is there any criteria? Yep. In support and resistance, when double bottom or double top work properly. Double bottom or double top work properly. So yep, sell off below that. It's not stopping here, man. It's going below that equal low as well. Anyway, I made a very small profit from that entry because it's again coming lower. Okay, maybe this is that inverted. It should come lower. It should not just go higher from this level. It should go below that equal. Criteria for double bottom, double top. Criteria double bottom, double top. I don't use like I don't use it to take a trade or anything. Okay, like there is no criteria for that sort of thing. But what usually happens is, when there is equal tops or equal highs over here like this way, that is where market tends to go for those liquidities. Like it's better, for example, if it can take this double top, okay, for any reason market is not taking the sell side, it's going higher and going to this fair value gap. During that moment, you have more relative equal lows over there, so you can aim for that as your sell side liquidity. So you can target those equal lows when market is coming from a valid area. Now I have double top, I have double bottom. Yes, the bottoms are more clear than the double top, which is like, still it's clear, but it's like exact low, and this is little gap over there. Okay, so this is a better draw if market could take or clear that. Otherwise, for example, if market can take this, you will still have a better draw on that buy side, because it has cleared this sell side. below this, the only sell side I'm seeing is sitting here, okay, before that market even opened. This is that only sell side where I have those relative equal lows. So if, for this specific target, okay, for market to take this, you have to wait until it can either create bearish fair value gaps or it can break this bullish fair value gap. When it will break the bullish fair value, you can now look for your sell short, which will still deliver a huge amount of profit. Literally, it's a very big amount, like around this area you will find your setup. So this is 61 handle, okay. You don't need that much to become a profitable trader. You need even lower or less than that. You have some relative equal lows sitting here as well. Now if this one, it inverted literally for what? For this sell side. If it wants to continue lower, you will find your setup for bigger runs. You will find that setup, but until it can go below the new week opening gap, it's better to sit and watch the price action. You can mark certain levels. You can look for your, like, if you're reading it properly or not, if you're seeing the market properly or not. Didn't I see, like, say, like the volume is spiking? Now we are not used to, right? We ICT trader, we don't look into any indicators. We don't like this, but volume is telling you a story over there, okay. Before that move happened, that stopped me my trade into break even or whatever, like little bit of profit. I already saw that a spike is happening around this area, remember? And the decline in buy volumes, that is important. This thing can give you more precision, trust me. Like, literally, this is something that everyone uses. The volume tells you some story. When a big candle happens, if the volume is not suggesting that the big candle should be something you will be worried about or you will be using to look for your entry, volume will tell you that. See here, you have a huge volume, but the candle comparing to the previous one was a small one. What is that saying? Around that area, market has more selling orders or pending sell orders than the buyers. Like, people are willing to sell more than buy around that area. Let me actually see and extend this from where the market actually fall. Extend right, and let me change the color to maybe black. This is that zone, okay. That huge volume candle was that one. Look, anyway, I don't have much knowledge about that, so rather than teaching you about volume, it's better if you look for it, or if you keep this on. It's up to you. If you don't use it, don't worry. There are equal lows. Market should clear either the equal low or the equal high. Simple. Wait until that happens, and then if market is giving you a direction towards the upside or set up for the buy side, you have your target very clearly visible over there. You can use that way. That's why ICT people don't use any indicator, but because the equal lows are the draw. See, like that equal lows cleared. Now if you can get a buy setup, you can look for that buy setup for that equal high. But better to wait and get the setup, not pressing the button. For here, the same thing, okay. Still remember my stop loss, and before I moved it, what did I said? Like, now if it wants, it can stop me because I'm willing to end the stream. But before taking a partial, I don't move my stop loss. So if it had to stop me out, this is where I am happy to take that loss, okay. So market is still not proving me wrong on that buy side, not yet. There was equal low, cleared that low. Now if it's going higher for your buy side delivery, and if it can create fair value and give you the setup, you will still look for that buy side to be taken and that fair value to be traded, because it's still inside of that range. Remember, it's literally inside of, like, from the high to the low. Until a body crosses the high or the low, that consolidation is still there. And within that you have this new week opening gap. If it breaks below that new week opening gap, you will find your 15 minutes bearish fair value gap right here. Okay, I was about to finish the stream. Otherwise, I would say, like, if it can create that bearish fair value, you will find your entry straight away from that fair value. Literally, that has already given you the direction so far. Just wait until it can close below that fair value gap, like that new week opening gap. Until that is happening, better wait. If it's going higher, you will get your bullish fair value to enter into a trade. If it's going lower, below that you will find, or like overlapping the low of the new week opening gap, you will find your bearish fair value. But the way market is trading, it's way lower than that equal high. So I'm seeing after clearing this equal low, this is the next target, and again that imbalance has to be balanced. So market should go for that high one more time, especially those equal highs and that imbalance. Lunch hour, okay, 12. From 12 everything changes. The whole day market was going higher. The moment 12 kicked in, you are seeing your lower run until what? A low. After what? Taking buy side, it's always doing this way. What gonna happen during lunch hour is mostly it will take the price above a high, again come below a low, above a high, below a low. That way they are taking their profits. They are exiting out of their trades. That's the way they are looking for their profit taking system. Like the whole day they were taking the profit on the buy side. Now every time a small time frame high or low is getting violated, you will see some opposite setup is happening. But that setup is not something you will be looking for taking a trade, because it's lunch hour. You don't know how far it gonna push the price. That's the only problem over there. It again came back into that area. What the hell just happened? Why my chart stopped? API disconnected. Okay. Don't do it, but I'm just doing it because I know like what I'm actually looking around this area. Don't do it, please. Even that is not a good target. Okay, I'm more of a thinking like this area. From here market will again come for another lower run, maybe. This is a better target. This let's see how much it too low for me. But this is a better area. Okay, just keep an eye on this part. Based on a 15 seconds chart, I just used that 15 seconds bullish fair value. After that equal low has been taken, and this liquidity graph, this market structure shift with that fair value gap, and lower it is trading already a smaller fair value. So I just put it below that area. Maybe that is still better. Just $290 risk. But more focus is until that equal high, because lunch hour it will push above a recent high, come below a recent low. That gonna happen. I'm taking this entry mostly to show you guys like how the lunch hour will ruin you if you look for entry. And now let me go back to the 1 minute. So that is that bullish fair value. Let me remove it for now, because from using that it has already cleared that sell side, so I don't really need to keep that anymore. And this is that area that I'm looking forward to, like how the market is doing over there. Ah, 14 handle shouldn't have, but it's okay. 20 handle could have been a better target. let's see 15 seconds. How the 15 seconds is looking over there. I saw the change in state in 1 minute. Okay, like I just saw that change in state and this candles tap over there, and I was looking for a 15 seconds fair value to form. During that move I saw this fair value, and there was a very small one below that. With that bearish one was inverted. Okay, like this one on the 15 seconds. So after taking or clearing that equal low, so that's the reason I came to 15 seconds and use that fair value to enter. I think my stop loss should be around this area, but 15 seconds too many volume imbalances. That's why I'm just putting it little lower where the 1 minute is suggesting. Yeah, so 1 minute, I think this was a better area that covers the order block mean threshold. No, so maybe just here. Should not come there, but anyway, I mean, this candle's low should be a better area too. Let's see. Recent high, recent low, that gonna happen. Okay, wherever market is in lunch hour, I took this entry just to show you guys how the lunch hour can ruin you. Now if it rewards me, that's a false reward that I was not expecting. Okay, just one candle high, this low, you will see this sort of thing. Even if you look, it created here relative equal high, traded below that low, it's again going for this high, come back, go for this, come back. That gonna happen throughout the lunch hour. So be fearful about that, and that's why ICT said not to trade. Good night, bro. Yeah, thank you. Actually, that's even better. I don't know how I'm still getting so many people. I'm sorry, I didn't read maybe a lot of comments, so let me actually check. Is there any criteria? Okay, I have talked to it yesterday and today. Market make equal highs and lows are working perfect. Yeah, I mean equal highs and lows, that can be your double top double bottom, but I didn't trade double top double bottom that much. Like I have very less experience regarding that. Let me just do it here. Okay, I'm not willing to hold it any longer and finish the stream as soon as I can. If it comes lower, even better. Anyway, so that's what I said. So I don't have enough experience about double top double bottom, but yeah, I mean everything works when you can align it with your higher time frame. Support resistance trader, like in top step, Dakota. Have you watched Dakota? The guy Dakota on Top Step TV. He is not here today, but Dakota, okay, like slow market with Dakota or something. Let me actually bring that guy. He's a solely support resistance trader, and slow market with Dakota here. This guy, okay, and he is one of the like top payout holder from Top Step. One of the, I'm not saying the top, but one of the top. He was on top. He was the number one highest profitable trader there, but nowadays he is not in that position. I guess he lost some big amounts in recent volatility. That is why I'm saying, like, so it cleared that. I believe if this move is not aiming for that fair value, it gonna come again below this low and then continue. Like this move, if it create this fair value and continue for this fair value gap, that is that part. If it doesn't do that, it gonna come back again for this low. By the way, it's not even 20 handles. If it stops me, let it stop, but less than 20 handle is something I don't really want. Maybe 400 and 200, so 1:2. Nah, that doesn't add up. My initial risk was something like 300 something, so 1:2 is not forcing the stop loss after market moving away. It's mostly wherever the first stop loss was, maybe around this area if I'm not wrong. So that was 300. So this profit has to be $600 to call it a 1:2, but it's okay. It's okay. Wherever. I mean 20 handles. 10 to 20 handles, that's what ICT said, but I prefer at least 20. Okay. But if you target even 10 handles, that's $200 every day. Not bad at all. Remember, the main focus is this fair value. So a tick or two inside of that fair value is where market is going. Oh shit, why did I remove that one? That equal high taken, market finding some support over there. Okay, support resistance, the typical support. On the other hand, finding resistance around that area, but fair value, inefficiency. Okay, after taking liquidity, going for inefficiency. That's why I pressed my button. Okay, and yes, it should be maybe around this area, 37 or something, not that far inside the fair value, but just targeting it because it is what it is. Okay, so this one is traded, however no wick below that. So after trading there, market can come literally for that volume imbalance area, or even before, I don't know. Lunch hour sucks, and ICT said over and over again not to trade your lunch hour. By the way, 15-minute, 5 minutes fair value. I mean, maybe it has reached where it had to reach, but still, let's see, like the inefficiency is still there in 1 minute, overlapping with 5 minutes, if it can reach for that inefficiency or not. Now tell brother, this is consolidation happening. Now what, it expand or reversal? So still you are seeing the bodies. Okay, look at the bodies, the highs, the lows. It's creating wicks below and wicks above. So if it takes the by like now, for now, okay, what it has done, it has extended or expanded the consolidation range. If it goes above those highs, like especially this high with a body, you are looking forward or looking towards a expansion. How you can utilize that expansion leg, you are seeing here. Okay, especially look, this can be a possible change in state of delivery. So if market is going above the mean threshold of that candle, that order block, extreme order block, okay, from where the biggest fall you saw in a while, if it closes above that, by the meantime, what it gonna do? I have so many lines. Let me actually clear a little bit from these areas so that you guys can see. And remember, that is where my target should be, but still I'm looking or aiming for that area. By the time you will see market is breaking that mean threshold, this 5 minutes bearish fair value will turn into a inverted fair value. So you can utilize that fair value overlapping with any other 1 minute PD array. You can utilize that part when market is expanding higher. If it's not expanding higher, but what you have to do first, you have to wait until it can literally close above that mean threshold, if you are still willing to look for setup. If you don't wait, that is where you will get messed up, like literally messed up. That's that middle 5 minutes middle point rejection. So wait until market can literally break the fair value and the mean threshold. Let me actually put it as empty rather than so many lines. Okay, and this is that 5 minutes fair value. This is that midpoint of the 5 minutes fair value. So you can utilize that when market will close above that with new fair value gaps overlapping this one. Okay, the 5 minutes, the higher time frame, you can see here 15 minutes you have nothing, but on 5 minutes you have a fair value. That is possibly a change in state. If market is reversing from here, coming below this low, you will get your new structures around that area. By the meantime, it will close below that new week opening gap. So you can utilize that structure to look for the sell short because you are looking at your reversal. It's literally respecting the change in state, the fair value gap you marked, and it's closing below your 3 level of defenses already. Okay. So in that scenario, you are looking forward to take a sell short. Take a partial below this low. Where? Below this low. How far it is? Remember, like you are framing your trade around this area below the new week opening gap. So from there, if you can find your setup, you're targeting until this low first. This is 48 handle. Maybe you can get 30 handle or something like that. Take a partial there. This is a 15 minutes bullish fair value gap that market left literally full unfilled. Okay, there it didn't trade that fair value at all. So you can maybe look forward to that sell side, but must take partial here and then maybe hold the rest for that extreme sell side, trailing your stop loss or putting your stop loss to break even. This is that moment. If market can come below and close below this new week, you are looking at a possible sell side delivery. Not possible, it's pretty confirmed that moment because 15 minutes change in state I can see over there. Order block low is there which market has traded and somewhat it's respecting that area. The 5 minutes bearish fair value, the middle point rejection happened here. Unless or until it breaks this fair value and closes above the mean threshold of your 15 minutes, do not frame the buy. Remember when I took this, what did I say? I'm just trying to show you guys, every time it's pushing to a high, it's coming below a low. The recent low, you will not mark that low as your target. When it was creating this one, you will not mark that one, but that's how they are exiting out of their position to make to grab the profit. During lunch hour, this happens a lot. So that's why you should not be looking for the lunch hour entries or setups. Wait until it's 1:30. From 1:30, especially like 150 to 210, there will be a macro overlapping with a silver bullet. That is a high volatility and high what it calls, like high air resistance run or whatever. I forgot the exact word, like it's not coming out of my head right now, but that is a very good area to look for your entry. This is what I'm saying, it's like overlapping a macro with a silver bullet setup. So you will wait during the macro for one side of liquidity to be taken and the other side of fair value to form. If it comes from a higher time frame point of interest and you have clear buy side sell side liquidities, even better. That's where you will get even more profitable trades or profits to accumulate. Let me actually finish the thing over here and exit out of the trade. $300 is not bad. I mean, that's a 15 handle, but anyway, I would love to make at least 20 handle, but lunch hour, okay? Order filled. Chances are it will again come below this low. There is a chance. That's why. And if it can go higher, you will find your new setup overlapping. Like for example, it's creating new fair value gaps overlapping with your 5 minutes bullish fair value and breaking that 15 minutes mean threshold. And let me actually check how the volume is looking. Okay, it's increasing. See, the bars are increasing. This bar is bigger than this, and then this one is bigger. The sell ones are smaller. It was getting bigger, then bullish on is like bullish on, and the bearish ones compare, like how many bigger one and how many smaller ones. That's that part. Sell off gonna happen above and below every highs and lows. Yeah, I'm just willing to finish the stream as soon as possible. That's why It could have given me that 400 as well, but I don't bother regarding that. It was a 15 seconds entry, okay, like literally from this fair value until that equal high, and we have range over there. See, it's again coming lower. Now look, why I said that we will not look for those. See that low cleared, high was cleared, immediately low was cleared. Some highs are cleared, low are cleared. Similar thing you are seeing again. Maybe it's respecting fair value, or it is now from this fair value going lower. Whatever happens, you will find it within next couple of minutes, because I believe it should take clear this low as well, if I'm not wrong. And if the market is aiming for those equal highs, then this is the target. You can take partial, but this is where market should at least reach for. Okay, that's that 15 seconds structure. And lunch hour, this sort of thing will happen. Why I'm saying this is because look here, okay, like market traded that fair value, came below that low, went higher, created new fair value. Yes, there is no week, market came below that week, but it should not break that fair value this way. It again went through that fair value, although this one in 1 minute there is a bigger fair value, which that is why market had to trade until that far. Okay, but 15 seconds, okay, think that exact same structure happening in 1 minute. The exact same structure happening in 1 minute. Its price is fractal. It will happen. Whatever you are seeing, most of the time it will happen in every other time frame. That is that part where the accuracy will not work. Yes, it didn't took the third candle slow, so you are still safe on the entry. But the way it did over here, it could have done it until the high of the new week opening gap. It doesn't need to go below that this much and then again go higher, then create new structures. See here again, I'm talking about this fair value here. Okay, it created another fair value, but came below through that fair value, traded below those low, then went above those high. Multiple fair value gaps. Lower on can be your breakaway gap, which is still a breakaway. But why I'm talking about that specific area? It traded this fair value, went higher, immediately created a very good size fair value gap. Respected a little, went, created exact equal, came below that low, took the liquidity, traded this, went higher, created fair value, traded that fair value, went higher, immediately there is a bullish fair value gap. But let's say this fair value was not available. Where is the market? Again came below that equal low. I believe it's coming for that low as well, if not this low. Let's see, like, I don't know, let's see how the market is doing. But again, it created new bullish fair value that it didn't respect over here. Now if you're talking about the third candle, yes, it didn't took the third candle slow yet, so still you can see that, but there is the precision is not happening during the lunch hour. Okay, like this fair value broken once, broken twice. That's where the problem lays. And I believe it should take this low, not like even this low as well. That's the lunch hour. It will take some high, take some low, clearing some lows, taking some highs. It will go maybe again higher there as well, after taking maybe this low or maybe this low. That's how the lunch hour price action goes, and that's why you should not be looking for trades. Yes, 15 seconds I utilized because I saw something over there on the 1 minute. That's why, like literally 1 minute here. Okay, after clearing the equal, the next candle engulfed and closed above that. The very next candle traded back that range and then started going higher with this fair value. But by the time I was looking at this engulfment, in 15 seconds I was looking into that area. Okay, like this area. So this was that change in state around this. The very next candle traded back into that inversion. This is at the fair value form. That's why I took the entry from there, but targeting the very nearest liquidity, which is this one. which was not even 20 handles. Okay, it was literally 15 handle, so $300. W for SFA. Hey, bro, it's not a win, bro. It's not a win. Yeah, I mean, whatever it is, some profit is profit. Even though this one was showing more profit when I was in that trade, like from around this area. That was showing even more profit, nearly like $600 or something. Let me go back to 1 minute and let me figure out. At 25% I had one, and at that new week opening gap high I had another. So the average came 25, and this, so around this area is where my average came. Yeah, something like this, 400 something risk. So this move was this move was giving me literally 37.5 handle worth of profit. Okay, so that was nearly $700, even more than that, but I didn't take it. So lunch hour started, everything went sideways, and you can expect that in lunch hour, during lunch hour. That candle doesn't have a wick, so it's still I believe it will come below that candle, even there as well. Just have to confirm that from 5 minutes or 15 minutes. So 5 minutes on this candle doesn't have a wick. Chances are high. I don't know, but chances are high. By the way, if it can reach here, okay, and you can find some setup after the lunch hour finishes, you can look for a possible sell short from that area. Okay, this is not a financial advice or anything, any trading signal or anything, but if I was there, I would look for a sell short from this area, maybe targeting 1 to 2 or whatever, like few handles worth of move, not looking for until, like, of course, if you find a setup, remember what I said, if you find a setup. So if you find a setup, only then take that entry. If you don't find a setup from this fair value, wait, if market is breaking that, you can even use that fair value to frame a setup for that buy side, because that is another equal high. Okay, like literally this relative equal high. So be careful. Just I hope you know how to trade. I hope you know how to find your trade. If it gives you setup from this fair value, you can take that for a kind of retracement entry. For example, if market is going for that, on 15 minutes you will see your fair value gap forming. So from there, if you find a setup, your target is until that 15-minute retracement. Maybe this candle can act as your order block. Okay, if market can go through that, this candle will, maybe this will be your order block. It has traded below a liquidity level, it has traded into a fair value gap. So this will act as your 15 minutes order block if it can expand above that and close above that order block price. Okay, so when that will happen, from here the retracement entry, if only there is a setup. Without setup, please do not enter. Okay, you can look for that part. It's not a small range, it's pretty good range, like literally I believe market will revisit for that order block top or something. So around 20-30 handle worth of move, a small risk, a small profit, that's what you accumulate. Okay, so yeah, I mean, I should finish now actually, guys. I have work tomorrow as well, so from 9:30 until 4 I will be outside. Not 4 actually, 5 plus, because that will be my like it takes another 32 minutes to return home. So around 5 o'clock I will be back home. So maybe tomorrow night I will try to come 5-10 minutes before the 9:30 open, and stay until 12 o'clock. I always aim until 12, but somehow it turns into 12:31 to I don't know how, but it happens. So yeah, I mean, stay safe, take a very good care of yourself, your health, and your loved one. And bye bye it. Kharcha pani. Yep, bro. Kharcha pani, bro. Kharcha pani. Kharcha pani. Yep. I need literally that much. Okay, I literally need in a week just for the tea, the food I have outside. I need in Australian dollar. I was calculating like fortnightly. I need near about $1,500, including my other bills as well. So like all my expenditure, my rent, my utilities, then the food, the beverage, everything around $1,500 on fortnightly. Okay, it's not a lot, but yeah, it is what it is. And in this fortnight, just by trading, I'm about to make $4,330 or something altogether, like the withdrawal I'm about to get. So yeah, before I go, one more time, guys, I'm trying my best to inspire you all to look for this. Okay, remember this account I have locked out. 1 2 3 4 5 6 7 8 9 10 already made a withdrawal. The next withdrawal is ready. The current balance is literally looking like this. Okay, I have manually locked it, so I cannot trade or anything. Okay, I named it as bread and butter. This is how it looks. On 10 trading days, I have made another like I have would this is how much I made. The total profit was this 8,548 in 10 days just by accumulating this. Okay, this is how the PNL curve is looking. Just by accumulating small profits, this is how much I made. Okay, 1794, then 506, this Saturday Sunday gone, 5 days in a row. Big small mix, but big means not huge. Okay, one trade, the 1 to 2 partial taken, then the rest of the position where the obvious level is. That's how the 900 came. Same thing, same thing. Okay, so go small, take profit, and make sure whenever you are withdrawing, you are leaving some money for your trades as well. Do not just, let's say you made $2,000 and you are already able to withdraw 50% of your account balance. Don't go for exact 50% because that will leave you with only just $1,000. What if you don't make the next day, like you lose some money? You will have very less amount to trade and it may cause you lose that funded account as well. So try to first build the account, then withdraw. For example, my first withdrawal, I build my account until $4,200. Then I went for the withdrawal wherever it shows. Let me check here. Okay, 4,200. I hope you guys can see this. So 4,200, $4. I made $2,000, 2,100. Like this is where I made 50% withdrawal. Because what, this is a 50k account. My stop loss or the max loss limit I can take was $200. From 4,200, if I withdraw 50%, I will still have more than $2,000 left on my account. So I still have the same ability, if not more ability, to trade on the account. Same thing. Now I have like 100% winning this and that, don't worry, like 71.73%. I don't know how this thing they are calculating, but it should be way higher. Literally, it should be way higher. So now that the balance is 4,669, okay, I can withdraw half of it. It will still leave me more than 2,000, which is nearly, like, even if I withdraw exact half, it will leave me $2,335 on the account. So that is more than what my maximum loss limit was on that account. So I'm slowly building. Every time I'm withdrawing, I'm adding some money to that max loss limit. Currently, yes, answer me. What was your Mustafa? Just a second, brother. I can see your okay. 1 15 minute chart. You are saying if candle close above the consolidation, example 915 candle. Okay, 915 candle body closed above the body of the consolidation. It means expansion. Yeah, that is when you are looking forward to your expansion. I will go to your chart. Let me just show you the other account. As I was saying, I just recently came to another account. Okay, I don't know why still it's infinity. I really don't know, but 100% winning trade. Okay, 2 trades. It's showing 12 because I add and take partials, that's why, but it's literally 2 trades. I made 1393, 100% winning this. This is the other funded account. Okay, I don't know if you guys saw it or not. This is the other one, and on this account same thing I'm following, just this way. Okay, like let me come to the October. 900 and 450. See, like I started taking profit and then left the rest runner. That's how it looks like. The curve is too high over there, that's why. So that's that part. Again, going slow. I know by 2 days I have already made $1,400. So if I can go slow like this, maybe 300-400 target is what I'm doing with these accounts, since I copy the same trade on both of them. So it's gonna be the same amount. However, remember what I'm doing is tomorrow morning, the first thing I'm doing is I'm requesting a withdrawal or payout from the other one, and for until that payout is deducted from my account, I'm only going to trade on this one account. Maybe I will copy trade on some others, but not the one I have requested payout. That will sit there. The moment it deducts the amount from my account, that is when I will start to I will start to copy the whole thing again. Now about your question, this is manual locked out. Okay, manually locked out. Don't worry about that part. So 9, what was that time? 9:15 candle should be somewhere here. Okay, no, your 9:50 candle is still closing. Oh sorry, this is 5 minutes. Sorry. Here, yes. Oh no, same thing. The 9:15 candle, yeah, you can actually look for it because it has created already bullish fair value over there, but since equal low, better until it can close above that. Okay, it's still the same range the body is closing, so you don't know the next candle when this was happening, you don't know if it's going for that area one more time or not. Here see the like this part. Okay, every time market was coming into this, it was rejecting from there. Same thing you can find out around this area. Okay, before as well, like this is past, this is future, but look how it was always sitting inside the range. Maybe it is extending the range because initially the range was here. Okay, the initial range was like this, but when market went above these highs, even here, okay, when it created a new high over there, I don't know if you guys can see it or not, so let me make it a bit bigger. So when it was taking that high, it was still, the bodies are still coming back into the range. It's like relative equals or equal bodies over there. Next time your extension happened how far? Like you are extending the same thing until this far. Okay, same thing is here, it is still inside, but you can extend maybe the thing until that far, because that is where the most of the support resistance happened. Same thing here, same thing there. What you can do is wait until a body passes or closes above that. If you don't get that, it can go lower for your reversal. You can look for that reversal as well. This candle traded the fair value, but you are still not sure. So think this way. Okay, you let the whole part go. Just think this one simple way. You let this part of this retracement to the fair value part go. Finally, market broke above that. Didn't it came back for that fair value? So why didn't you took entry here and just put your stop loss below that candle and target for whatever that next level of liquidity is? Or you can, like, this is from 15 minutes, so you can literally frame it with your 5 minutes or with your 1 minute. Look here, after trading that fair value, when market broke higher or broke that consolidation range for that expansion, when you got your confirmation, it created from 5 minutes, I'm showing you, okay, one fair value, like after trading that area, like not 930, even let me remove the 930 here, okay, after trading that 15 minutes fair value from this, when you got your confirmation and market opened 930 happened, that thing is already outside of your mind, so you don't need to worry about 930 anymore. Only if there is a news at 10 you can worry about that, but don't worry, your 930, worrying about 930 part is already done. Now when market was going higher, your first fair value, so your 5 minutes back, you can expect the same thing with your 15 minutes as well. So your 15 minutes after trading this fair value, this is the first fair value, so it can remain as a bag. So you can maybe choose to put your stop loss below the midpoint of that big fair value. That can be a possible area, because if it's bag, mostly it will not even trade for the midpoint. Literally, this is where you saw that happened. But from, if you are using multiple time frames, how it can help you here, 15 minutes breakaway gap, but it's only one after trading that, still you can expect it to remain as a breakaway gap. I have other reasons, but I will make it very simple and short. 5 minutes is suggesting you have a first fair value, then a second fair value, so you are looking for your entries from this fair value when market will remain this as a bag. So if you are even taking your entry from this fair value, your stop loss can cover that fair value. Yes, I know, 47 handles. Refine that with your 1 minute. Is there any reason for market not to go any lower than that? I'm seeing that propulsion block. What is a propulsion block? Remember, I said everyone please look on Google for that specific thing. What is the propulsion block? It will give you explosive reaction after a propulsion block is formed. Have you got your explosive reaction? When is your propulsion block working? Look for those sort of things. Didn't I said the other day, if you were here, a propulsion block after it forms, it will literally create fair value gaps, because the definition of propulsion is that. The definition is that. That is your literally. Look, after this down close candle, what have you seen over there? Didn't I talked about this entry? What did I said? How far market will come, because there is no wick. But where is your stop loss? Below the third candle's low, one single fair value. If there was more than that, market could trade that fair value. In that case, maybe you could put little lower than that, since there is no wick, okay, because of that. At the same time, what is suggesting you that area, that specific area? Again, 5 minutes, 15 minutes. So that specific area is covered by 3 different time frames. So you are using it or aligning it with that. That was your entry. Didn't market deliver? The buy side, remember, it was somewhat around this area like this. Target that. Maybe take a partial above this high, since at the new week opening gap midpoint you had relative equal highs over there. Maybe you could target until that far for a partial, this until this as a partial. When market was going higher, this was your buy side liquidity. You could take another partial here or close the full entry there, but first partial has to be there. If not the low of the new week, then the mid of the new week, because there is some relative equal lows over there, relative equal highs over there. So you can take some partial. So same thing, entering from this fair value. I know how, remember I literally was talking about this entry, like this one. Like only thing I didn't like about that fair value is there is no wick, so the 50% may not work. Remember what I said? How far the market came and then started going higher. The similar thing here, okay? Yes, it created equal lows. I was saying I didn't like it. It could have been even better if market could clear that low. Remember, I don't know if you remember that or not. That 50% area was rejecting, but the moment it created equal low, my trade turned into a low probability. Not just that, the time. I was saying it over and over again, like 12 is very nearby. By the time 12 is coming, I'm not seeing market has that power. So I'm not seeing market can go for that fair value before lunch hour or before PM session. Look at this here, PM, like lunch hour. Literally came below all those. Remember, I was talking about that there is no weak over there, and market will take some high, market will take some low. It took all of the swing lows you can see. Now it's again going higher. This is why ICT said avoid lunch hour. That's the only reason ICT said avoid lunch hour. Okay, and about the mean threshold of that 15 minutes candle, I already saw when I was explaining, but here, okay, that's how it looks in 5 minutes, in 1 minute, in 15 minutes. So you can expect market can go lower now as well. If it wants to go higher, you will find your setup. But look how the bodies are doing. It's what on the 15 minutes chart. Is it giving you any sort of direction? If there is no direction here, forget what 1 minute is doing. You don't have to worry about what 1 minute is doing. There is no direction I'm seeing here, especially at this moment of time. Wait until lunch hour is finished, you will see the direction and the move will be damn volatile. Remember yesterday when market was doing the thing over here? It was this volatile. Yes, I didn't wait until that far and looked for another entry from this area, but didn't it, like the first time, even forget about this area here, this was the first time market revisited that fair value. The move it gave you, like the reaction you got from the 1 minute, I believe that was good enough to give you enough profit. I don't know how far it is, and I have to look for that level here. Okay, here. See again the overlapping PD array. Okay, meet new week opening gap, 1 minute bearish fair value, 15-minute bearish fair value. That is that entry. And this was the move from that fair value. First time it revisited, but forget about that move. Like it literally took that low, you are done for your day. If not, literally from the same fair value, the next day opened Asia. If you trade Asia, then that is from the same area. Market came below that low before it could go for that reversal. Okay. Yes, it stayed more, like spend more time around that. Finally it went higher, but that low was never taken. Okay, before it gave you that move, the extreme low that it created from that consolidation range, it was never taken. So overlap PDRS inside of your higher time frame point of interest. Simple thing. Midnight, forget that. Everything else I draw. New new day opening gap, and there are two opening gaps overlapping over there. I know because I already have the levels, but at the same time you can see over there as well. You have a liquidity grab, you have a market structure shift, fair value gap. This candle came very close to that. Maybe that can be a close proximate. Okay, don't worry about that candle. The whole low, high, lower low, this level. Okay, from this high, if you look at that on your 5 minutes or 15 minutes, it will make more sense. Let me actually bring my chart to that area here. So liquidity, okay, this is a valid swing low, valid swing high, swing low. So liquidity grab, market structure shift, overlapping PDRS. This is your break or block over here. Okay, look for your fair value gap. When market was going higher or giving you the market structure shift, this is your breakaway gap on 5 minutes. This is your fair value gap to enter on 5 minutes. Okay, if you want to wait until there, because there is a new week opening gap, see that after trading this, the first fair value gap was formed when market was breaking your new week opening gap. Overlapping PDRS, what went higher? Same thing, the same area. Okay, let me actually remove those boxes from that 5 minutes now, and let me come to 1 minute. From there, this was your breaker where market traded. You let it go or you didn't take the entry because you have a new week opening gap sitting there. Your buy side is way higher. Remember the reversal, if it is that reversal from the consolidation, those were your buy side. So you can literally wait that part, this part. Your buy side is still that far from that level. Okay, on the higher time frame, it's until that far. So you know how far you can look for. The same thing. When you let it go, when market broke through that area, look how many fair values it has created. One fair value here, the second fair value here. Over and over again, I said when you have a huge fair value gap, look for your entries around 25%. Didn't it give you the entry? Same thing I said for it's way up there, but when I started the stream, remember that big fair value, even I took the entry as well from there. It's that part. Okay, this is me experiencing things that much. You can either use your stop loss since that is the midpoint, below the midpoint of the new week, or simple breakaway gap. There is no week, so use the third candle slow. If it's too big, reduce your lot size. Okay, from here until here, if it's too big, it's only 19 handle, should not be a issue, but still if it's too big, reduce your lot size. From MNQ you can do it. Okay, and then target what? Target extreme buy side, but yes, you can take some partial at 1 to 2, which I suggest you should be doing. In longer term you will see more profit. Okay, this is where you are taking your 1 to 2 partial if possible. The rest you are holding until what? Look, above this buy side there is no higher time frame PDR over here that can stop the market. So where can you target the next? The low of your new week opening gap, literally there. So this is how your entry will be looking. Yes, it will take longer, but that is how it will be looking. Not because I'm seeing it, but because remember the $450, I literally used that part of the entry. But as I said, I'm aiming for the lower profits, the smallest possible profit, to make sure that you guys are getting the point that you don't need to aim for the low. Like market doesn't need to take the buy side or sell side to make you profitable. You got your direction, just with the direction you framed your setup. You waited just a little to make sure that you are right about the direction. That's where everything lies. Okay, you don't have to be correct about that. Remember, see this settlement, this is today's settlement, it's still there. And there is this blue line. Okay, why this blue line? Hourly fair value gap high was there. This hourly fair value gap high, okay, literally was here. Now let me go back to 1 minute. You know the blue line, the reason there is a blue line. When market was trading there, okay, just first of all, the 930 open happened on this candle. Look at the direction, lower. Okay, this is that settlement. Whatever, I hope you got that settlement. It's not exact level, and now it's exact. From that high, okay, if not that 930, after taking this high and after reaching here from that high, it traded 75 level where you had a fair value gap bullish, 930 fair value, whatever. Like if for any reason the lower, what did I say, like it will at least fill up some portion, 75, 50, whatever. The first, I was looking for a bearish fair value to form here. If that didn't happen, when that didn't happen, there was another reason why I was looking for that, because there was this exact equal lows sitting right there, or relative equal lows, however you want to say. Around that level you had that 50% of the opening range gap as well sitting there. So I was expecting the 930 will take those before the buy move. Anyway, 930 created a bullish fair value. Okay, but just think this way, that you already on 930, until that 7.5 or that 25%. How many handles can you see over here? This is 22.5 handle. Now I'm mentioning that line because that is the hourly fair value gap high. When first time it was rejecting that way and second time you got a opportunity, it's a gamble. Okay, please do not do this, but I'm showing you because of the way, like if you can understand what market can do, this is where you are already profitable. You don't even need a setup. Now 9:30 fair value open happened. I said I don't put that tight. Okay, I don't put right below that. I haven't used 9:30 fair value enough until yesterday my friend came and he was talking about he puts right below that and it delivers 25 handle easily. Today it didn't deliver that way. However, every time if I'm entering, I will put the stop loss in a valid level, which is this one, the third candle of the fair value gap. If I'm using the fair value for buy setup, I'm using that. And I was pretty confident that from here market will again come lower because of that equal low, because of that settlement, because of that 50% close proximate to that equal low. But yeah, market once came, second time it didn't took that low, instead it respected that fair value. Bodies are somewhat inside the fair value gap because one tick closed below here and here, it is permissible. It's okay. It's more of a like printing, or the by the time the final second ended, market couldn't push it inside that level. So that one tick is permissible. Like big bodies under it, that is where I will consider fake breakout happened. Anyway, but that happened. Now he said he targets 25 handle, so that 25 handle is until this far, which is until this candle, that is done. If you put it properly, you would get it. But I say what, no matter what, this is where I target. If I'm entering, I'm putting the stop loss to the reasonable level. I'm targeting at least 1 to 2. That's no matter what, I'm looking for that. I don't even look on the left what can send the price lower. If I'm entering, that is my minimum, because the win rate I have, the risk to reward with this. Okay, I will actually bring you guys a chart of that. Okay, let me actually find it right now because I believe it's in Casper's recent video. Easiest way liquidity. Was this Casper or was this? I don't remember who exactly. Okay, I will bring it on my next stream. I will bring it on my next stream. Or let's see on the Google if I can find like trade win rate chart or tally, something like that. Win rate, not win rate. Win rate versus risk to reward chart. Okay, image could have been great. Okay, here. Which one? I think this one is better. So let me just save it. Just before I go, see, like somehow I make it over 1 p.m. I always aim to finish it by, look here. Okay, I don't know how clear you guys can see this. I'm trying my best to make things clearly visible. So 1 to 2 with 100 trades. This is 100 trades is a standard size of your journaling or back testing or forward testing. 100 is a good enough number that can give you the result, can be reliable. Okay, 100, the bigger the number, the better, but below 100 it doesn't make much sense. But think from here. Okay, 1:2, see that 5%. If you are 35%, like if you have 35% winning trades with 1 to 2 risk to reward, you will still Are you getting the point? You are losing 65 trades and making profits in 35 trades. You are still will be 5% in profit. Whatever you have risked, you will still be 5R in profit. This is 5R. Percent means R. Because you are risking, let's say 1% and you are targeting 1 to 2. So that is 2% you are making. So it's 5% gain or 5R profit. Okay. Same, just go this path. This account doesn't have, so let me just bring the one I have somewhat some data and let's compare. Okay. 71.43% win rate on that 50k account, the one I was showing earlier. See that 70 with 1 to 2. What is the 100 trades return? Let's say I don't have 70, I have 60, 95. I have somewhat around like 80 to 110% in return that I can get with 1 to 2. Just if I can manage to keep my take profit or win rate between 60 to 70%. I have traded good enough days. I want to keep it more days and see how this one works. Okay. So far it's a 71.43% after 10 profitable days in a row. Okay. So I want to see how 100 days can go. Maybe it will not be 100 profitable days in a go, but I will try my best to do that. But see, now if you are targeting any lower with that risk to reward, you must have to have higher win rates to become profitable. That 5% with 1 to 2, you can be with 35%. With 1:1, it's more about like you have to be a 55% winner. Less than that or 0.5 R in every trade, 70% win rate is something that you need. So it's important. It's not about how big of a profit you can make in a day. It's more about how many trades you have that risk tolerance for, like how the way you are managing your total balance. How many trades can you lose in a row before you blow that account or before you actually see the actual profit end result? It's that part. I'm trying to give you guys that part, that risk is small but have reasons. Don't overthink, don't overcalculate. What you don't have to move your stop loss to break even. You don't have to target where it can reach or how far it will go. You are risking $100, making 200, close the chart, go do whatever you want to do for the rest of the day. You're risking $200, making 400, 1:2, close the chart, go whatever you want to do. It will stop you sometimes. Let it stop. Don't trail it and invite the price to stop you. You are inviting the price to stop you out. That is something you should not be doing. If you invite it, you will never know the actual win rate you have because you didn't let the trade play out. You didn't let the trade say it is a losing trade or it is a winning trade. You trailed your stop loss, it stopped you, and then it went towards your direction, and you are now saying, oh shit man, if I didn't moved it here, I would have got a huge profit over there. Sometimes you are trailing and maybe hitting your target. Sometimes it's coming and stopping you out, then going towards your target. You will never know actual stops, like actual result of your trading. So for that, no matter what, at 1 to 2 I take partial. I don't even look left for the level that okay I can make it a tick above 1 to 2. I don't even look for that. After taking partial, I know that my trade is a winning trade because that was my initial target 1 to 2. If I'm holding for longer run, that is when I don't need any more play out, like my trade to play out. That's why I said after taking partial, I move my stop loss to break even. So once you take the partial, that is when you already know that yes, if I was targeting the full thing as 1 to 2, like the whole trade to take profit at 1 to 2 or 1 to 3, 2.5, whatever, I don't know, like you choose, because the higher you will go, the lower the win rate will be. So you have to keep that in mind. This is the best and sweetest spot that I have figured out so far. That's why I'm sticking with that one. Okay, before I used to target 3, 4, even 8, 9 are in my trades. I have trades on my channel that has 9 or 8 or 7 or this sort of entry. So many, you will find so many. But that happens very less often. That doesn't happen often. So rather than that, I choose the sweet spot where I can maintain a good amount of win rate. At the same time, the profit is good enough for me to make money. That's that part. I don't know, guys. If you want, I can share this photo with you guys on the Discord, but okay, I don't know, it's WEB. I'll convert it and share it with you guys. But yeah, or you can just search for that risk to reward versus win rate table on Google, and you will find it. That's that part. So choose something that has literally lessen your hard work. Like the days you are spending, the more information you are getting, that is the time when you are lessening your hard work. You are not making it even harder for yourself more. You are looking for that less of that hard works. Didn't I say? Like, remember, lunch hour is something you should always avoid, and this is that lunch hour move. Okay, took some, came below, retraced back, came. When this retracement was happening, I was literally looking for this level, but I didn't wanted to talk about this because inside the lunch hour, plus I was willing to finish the trade. But why this level is, it was literally creating a dealing range over here. In 1 minute, I was seeing literally this thing. Okay, then it took that low, retracing back into the OTC, the only fair value overlaps over there, or you can mark both of them. There is a small on here, and then continued lower. That part, but I was not saying it because I already told you guys that you have to wait until that breaks, and you will find your better setups. It's that moment of time that you are finding your better setup. I believe. Okay, how far? First target should be below this low where you have that 15 minutes breakaway gap. Then if you can, or maybe like if you find the entry 1 to 2, okay, whatever it is, or better if you can wait and see if market after taking this low can give you buy setup or not, because the whole day market was bullish. Yes, PM session can be bearish, but from there if you find a buy setup, that can also give you at least that 1 to 2 distributed profit as well, because there are so many liquidities sitting right there. Okay, so it's better, like whatever your bias is, wait for that side of setup to form. That's the simplest thing. And I'm still like, if by today it doesn't clear that sell side, then tomorrow during Asia or London, that will be the target. Unfortunately, I will not be here during that moment. But yeah, I hope that was insightful. I really want to finish it. Keep this in mind, that reduce load from your, like reduce your mental pressure and clear your mind, set it and forget it. It's more like that. Okay, when you are learning, you are expecting something, but it's not with your trade, it's with the market. After taking a trade, how you are expecting price to go towards that take profit direction, that is what you are only calculating. That should not affect your trade. It should not say, okay, it's not going higher or doing this, so I might what it is, brother. So now on 15 minutes chart, S&P 500 candle closes below this consolidation, so you can expect a bigger reversal or retracement on the PM session. That's exactly what you are seeing on the NQ as well. not just S&P 500, NQ as well. So I'm looking forward to that reversal, how it reverses, especially there is that bearish fair value overlapping the new week opening gap. If it can create even another one, that's even better. The spikes in sell volumes, especially look on the lowest, like the lowest body the candle have, the biggest volume is there. So this is a fake move towards the upside that you are, that's what, like let's say, like I don't know, volume bar and the chart is not suggesting like it should be like that way, so you can expect another fall towards the downside. Yeah, I mean, let's see, like this low is a must now. I don't know about that low. I don't know about this low, but this low is a must. And if it can create that bearish fair value, another one, while breaking the 15 minutes bullish on, you can expect the next move to take this sell side. This sell side will be taken before 4. You can be assured about that. Like if it can continue lower and give you that setup, perfect setup, this will be taken before 4. So within like 2 to 3 p.m. silver bullet time, maybe market will take that sell side. And how it's looking on the hourly, that is that fair value, and this is the hourly breakaway gap below this candle. So yeah, I mean, below that sell side liquidity, you have to keep an eye on that breakaway gap. Until this one is broken, again market can do a reversal on you. But yeah, I mean, the consolidation range broken, you need the strength of the fair value gap to confirm that. So for example, this candle still has 8 minutes to close. Okay, so if there is no fair value and if it goes back into the range, it didn't do its job over there. Okay, not yet. So you are still looking into the price and waiting for at least that fair value to be formed over there before you can literally frame your trade. 5 minutes has that fair value over there, but 15 minutes still didn't create any fair value. Keep an eye on, let me see how the 15 minutes fair value is looking over there. Why it's not showing over there? This one, okay. So it will be completely filled if market can reach, keep that fair value and retrace back there, because the 5 minutes is sitting a tick above that. So it will be fully filled. From this back, market will again continue lower. Yep. Gonna short, wait until it can reach back there, like after that 7 minutes something second, not before that. As if the fair value is not available, it gonna bite your ass, and it gonna bite the ass very hard. The reason behind that is, look here, okay, that fair value, like first of all, it's coming from the new week opening gap, but it didn't trade any fair value here. The bearish fair value, it was a very big one, not a bad size. Okay, market broke that, created a bullish, now kind of respecting that bullish fair value. The reason I said kind of is because it just closed once below that, and then the very next candle went through, and then that upper portion is still getting respected. So wait until that 6 minute 50 seconds is done, market will go higher, especially into that 5 minutes range, and then it will fall again. So if you are planning to sell short, you can maybe use that volume imbalance area where the new week opening up CE is above these highs. These highs will be taken. Okay, like literally it's coming out of no man's land. So Only I took only two. By the way, Murad bro, your problem is solved. Let me know before I go so that I can sleep in peace, because you are someone I'm waiting for the certificate. Like literally, I loved the fact that you actually learned the thing for like by practicing a long time. That's the best thing I loved about it. And even I loved it, like you might be the only one practicing it on crypto. Not yet. Oh damn it, bro. Dream keepers, okay, your dream keepers, your fancy name for gaming ID is now costing you or preventing you from completing the challenge. And you had maybe 300 something dollars left on the account to like pass, to complete, that you could have done yesterday as well. Holy shit, bro. Dream keepers, by the way, if you guys are aiming for um any prop firm, make sure you are putting your exact information, like your name, your middle name, date of birth, address, everything is right over there, the way on your photo ID card or valid ID card you have, that you can use for your verification. Otherwise you will be messed up like Murad, because he opened it to like sign up with Gmail. He pressed that option, and when he signed up with Gmail, it took the way the Gmail was created. So the name came Dream Keepers. Okay, his first name is Dream, last name is Keepers. Now he cannot verify the account, or he cannot continue with the account when he has paid for the challenge, and he is only $300 left from that completing that challenge. So please do not go with fancy names over there. Okay, username you can choose whatever you want to choose, but your personal information, make sure it is according to your ID. Yeah, yeah. So see, like who was saying me that, bro, on 15, yeah, so that is that part. Okay, see, it's going back for that range on more time, so it's still not broken on NQ, and if it fails to create even that small fair value gap over there, it's even low probability. But yeah, I mean, I believe it will trade back into this fair value, then again go higher, even if it does something like that. But see, this high will be taken. I don't care about anything else. But if I'm entering into a trade, maybe from this level where I have that 5 minutes bearish fair value, that can be a level. Or even better, if I can get on the top of that new week opening gap, like around that higher portion of that new week opening gap, so my stop loss will be way safe around that area. Okay, volume imbalance, so maybe here, I don't know how big, 16 17, yes, something like 16 17 handle or top stop loss, something like this, although should not go until that fair value, but because of the volume imbalance. So I am still looking at these highs to be taken, no matter what. And if it leaves it this way, comes for this sell side, then your buy setup will form around here for that as your first partial, and then target those equal highs as your next partial or the final TP, because it should not leave this like that way, because there is no fair value gap and it didn't even trade the consequent encouragement, at least here. I don't know about the trading view. So now it's the same, although there is this fair value I can see on trading view that I cannot see on top step. This is bloody hell, man. Why it's like this? Where is that fair value gap? Here it's no, there is no fair value. Just look, it's overlapping, no fair value, and there is that fair value. Anyway, I don't want to talk about it. Like I really I forgot to actually mark it, but before I actually go, what is that candle? 105 candle, 105. No FVG. Then there was this candle, 10, 0, 2. Week traded NWG. Then there was yesterday's 9:30 where market traded that, but here. So what was that low? 10:47. 10:47 a.m. on 7th October. Traded FVG. I'm gonna take screenshots of these areas and send to their support team to see what their answer is, because this is a very ridiculous thing. The whole concept goes otherwise. Like, if look at this, like I'm saying, these highs are coming from a no man's land, so there is that fair value. If it could go there, that's what I'm saying, right? Because I don't have this fair value available. But what is that fair value? Didn't I say, like, after closing here it will give you overlapping PD array? This is that overlapping PD array. Okay, at least when this was happening, literally on this move you could have already made maybe that 1 to 2. Like, your stop loss has to cover here, okay, for this specific area, maybe a little above your new week opening gap, and it has already delivered that 1 to 2. Like, literally that was delivered over there. You could put even little lower, but I'm just showing you because of this specific reason. Like, why on earth price has to be different over there? They are using the same trader weight platform and the same feed. Even they are using the trading view as well as their chart plotting area. There is no fair value over here, and for that I'm giving you, like, I'm sure that market should take this side. See, like, the whole thing is going otherwise. Like, I'm seeing something that is already a false thing, and based on a false thing, whatever the calculation will be, that will be false too. Like, that by these 4 or 3 candles you are already in your profitable trade done for your day, and I'm saying that I'm waiting for another move there for the next move. So I'm missing that opportunity and waiting for more opportunities. I mean, this is bullshit. I that's why I said, like, there are so many things they still need to fix before I can move all my account, and that is why I'm not aiming for bigger accounts or bigger profits here on top step X. This doesn't make sense, man. Doesn't make sense. My issue, okay, Brian, my issue is, if they're doing that, okay, see that new week opening gap, I have already checked, like, if my levels moved a little or not, especially here, okay. If my new week opening gap, the price 2003.75 and 2019.00, if I'm drawing it the exact same level over here, this is 2002.25. What was that? 2003.75. It's already changed over there. So this high didn't traded that new week opening gap, because the new week opening gap on trading view is lower. It's 202.25, not 203.75. And that's why that tap you saw is that tap. So it has nearly what is it, $1.50. So that's like 6 tick worth of difference over there. 6 tick. The problem is, bro, trade of it, when you have multiple accounts, you have to trade one trade of it. That's my problem. You cannot trade one trading view when you have, like, when you are trying to copy trade. Otherwise, what you have to do is you have to switch your account one by one from this trading panel. You have to switch your account, and then you have to take the, like, try to quickly place the entry on every other account and maintain it that way. Like, each account you have to maintain either manually, or you have, if you are planning to copy trade everything, you have to do on trade of it. You cannot do it on trading view anymore. Only because of that reason I'm trying to come here, because here all I have to do is go to the settings and then set for the copy trading, and then the account I'm making the master, I can, whatever I'm doing there, everyone else is following that, like every other account is following that thing. That was the only reason. At the same time, yes, you have so many options coming out of trading view, like all this chart and all this data, the second chart, everything. Even with a paid plan you cannot aim for that on. Okay, that's your 15 minutes fair value gap formed and tap happened, so your entry can be above, like above that fair value, because of that 5 minutes fair value sitting there, so around that high of the fair value. Although I'm not willing to, okay, I should not press it because it's on my, it's locked, but how I'm seeing it is because here is where you should be entering a stop loss. Because of the volume imbalance, leave it there and targeting until this far. So that's a 21 handle. Even better if you can take from that high of the new. Okay, I was actually framing it from the high previously, so you can take it from the high or from here. Okay, above, like at the high of the fair value. And again, the reason behind that is you have a 5 minutes bearish fair value right above that 15 minutes, so market can go little up there, especially for that fair value. And I was trying to mark this part. OTC, how come it's that thick? So OTC, the fair value is here, so it may go for that as well. It may go for that 7-9 level as well, and target is until this. Doesn't require, but if you want that, it's a 61 handle, but yeah, I mean, that's what I'm looking for. And this, if market can break through this fair value, that will be your inverted fair value right now. I mean, whatever I'm seeing here, it's still working. That's why I'm making the money. Otherwise, the way it's happening, look, this entry I'm trying to frame until that far, which solely based on this low and that low created relative equal low, nothing else. But here, just what I said, I don't look on the left for my 1 to 2. The fair, if the fair value was there, the proper stop loss I put there, 1 to 2 literally done here, then market came for that retracement. So I am already, after framing the trade, I'm already in profit within maybe 3-4 minutes. I don't need to now look for this drawdown, or may depend on new structures, something like I hope you guys are getting the point. Like, that is a very problematic thing to do. I will be wrong so many times when I'm seeing, like, my starting of the calculation, if it starts with a wrong market data that I'm seeing in front of me, then the whole calculation I'm doing will be wrong. So exactly, Ryan, I didn't know that you left top step X, but I thought it's been a while now. And also, like, think the market reply is not here, but sorry, the journaling thing, the manual lockout thing, this sort of thing helps a lot. I mean, to be honest, it helps a lot. The only thing that is a problem to me is the way I'm seeing nowadays the candles, the charts. If this is the case, I have to literally stop using top step X as well. So maybe I won't use for any other account, or I will keep my TraderPath accounts and I will just trade on my TraderPath accounts rather than building bigger accounts here. Because my calculation is starting with a false information. That's something I'm not liking. That's something I'm not liking. Anyway, guys, it's been a very long time actually. I should leave because it's nearly 4:40 a.m. Okay, whatever your bias is, stick with your bias and look for your proper setup. Like, wait for your proper setup. Okay, that's the best case of scenario. Just wait for your proper setup. Same thing can be said when I was seeing this, because of that equal. Okay, and because it was on my chart coming out of no man's land, so maybe that could have been my buy long, and I believe it has delivered more than enough I needed over there. So same thing. Okay, third candle slow or whatever, this is so far 39 handle. I believe the 1 to 2 will be delivered as well, and that 1 to 2 is way closer to my stop loss, but I'm just saying, like, if there was any other way to put the stop loss higher or not. For example, the lowest down close candle can be a reason to put it a bit higher and make it until this far. Okay, anyway, whatever it is, I should leave now. It will go down. Yeah, it should go down. That's what I'm expecting. Now let's see. Like, go down means at least these liquidities are now a obvious target for the market, and from this fair value how it trades. But the entry was because of that 5 minutes fair value from the top of that fair value. Okay, 15 minutes on is very small. It doesn't have, like, look at the 5-minute size and look at the 15-minute size. If I draw the 5 minutes on, it's maybe 3 times bigger or 2 times bigger than the 15 minutes. This is that 5 minutes fair value. So let me remove that part. Okay, that 5 minutes, and I'm expecting it to at least trade that high of the new week opening gap because of that fair value sitting right at that high. That's why this fair value. Okay, and this is the only 5 minutes fair value, so maybe I'll mark it as a bag, because you can expect maybe not the whole thing will be marked traded, but better if it can reach for that and then continue lower and leave the upper one as a breakaway gap. Anyway, I will go. Okay, so good night guys, good night, good night, good night. It's like 1:42. I was supposed to finish at 12. I was supposed to finish at 12. Good night guys, good night everyone. Take a very good care of yourself, your health and your loved one, and bye bye, and bye bye, finally bye bye. Okay, I'm closing it right